Well, welcome to Bitcoin for Corporations. I'm Michael Saylor. I'm the CEO of MicroStrategy. I have the honor to interview Jack Dorsey, my idol. This is going to be very, very exciting for me. I think Jack needs no introduction, but I'll introduce him anyway. I think Jack has been an instrumental leader in technology, both at Twitter and at Square, that's now Block. And Jack has been an inspirational leader in the Bitcoin community as well. And this is Jack's first interview in many, many months. And so I'm happy he chose to join us today. So Jack, welcome.
Thank you, Michael. And just to start, I just want to thank you. And I'm very grateful in how consistent your advocacy of Bitcoin has been, not only in speech, but in action. And the clarity you bring to the space, demystifying not only the technology, but what it means in terms of societal impact is very unique and very clarifying for so many. So thank you. Appreciate you.
Thanks. It's easy to support something which you feel so passionately about that's doing good for the world. Although I feel underdressed right now, Jack. I've got the wrong T-shirt on. What are you wearing?
I got the right T-shirt. I got the Lightning Labs is selling swag now, and of course they're selling it via Lightning, so you can go to their store and buy a T-shirt. So I got the Satoshi Nirvana shirt, my favorite band, my favorite pseudonym together.
Okay, I want a Satoshi T-shirt for Lightning.
Exactly.
It's going to spread fast. Okay, so today our agenda is to talk about Bitcoin strategy. We've got a lot of companies that are tuned in with us, probably institutional investors, probably industry analysts, and the topic is Bitcoin for corporations. A lot of the content in the space is about either Bitcoin, the technology, or Bitcoin as the asset, or Bitcoin as an investment, or economic discussions or political discussions. And what we wanted to do today and tomorrow is just talk about how Bitcoin can enhance your corporate performance. You can grow your company, grow your revenues, grow your cash flows, build shareholder value, right? We say Bitcoin fixes everything, right? And one thing that I think Bitcoin can fix is Bitcoin can fix a company, make it better. And your extraordinary example of success in this area. So I have an interview in 3 parts. My first part is, what does Bitcoin mean to the world? And my second part of the interview is, what does Bitcoin mean to Block? And the third part of my interview is, what does Bitcoin mean to corporations everywhere in the world? And what's the advice you might dispense to a company that's considering Bitcoin? So without further ado, why don't we start with the first question? In your opinion, what's Bitcoin mean to the world?
Well, I mean, a lot of us probably started with Bitcoin out of curiosity. And it led us to a path where we started questioning more and more around how the world works and doesn't work, and what are some of the greatest solutions to the problems that we're all facing, that we're all seeing. Obviously, there's the currency aspect, which I'm extremely passionate about. Having the internet having a native currency onto its own. That isn't dictated by decisions in Washington, D.C. that end up affecting people in the middle of Nigeria, which by its very virtue is not fair. But more than anything else for me, it was a reminder of the early internet that I grew up on. It is extremely principled. It's open source. Its workings are transparent. There's no single leader. The creator removed themselves from the equation fairly early on. The development model and the execution and operations has been consistent and unchallenged, and more than anything else, transparent. So the biggest thing that I think it means for the world is there is a way of building for the internet, building for the world that is trusted, that is open, that is inclusive of anyone who wants to participate. We don't typically see that in the corporate world that we tend to live in and that I tend to live in. So it gave me a lot of lessons, a lot of reminders of why the internet is so important and what we can do to ensure that people coming into intersection with this technology, that they trust it, and that if they have an idea that would make it better or make it more accessible, make it more secure, protect it even more, they can contribute. So there's so many lessons, but I think the internet having a native currency for itself opens so many doors, especially for internet companies, technology companies, but more importantly for everyday people, activists, people who have questions in the world, people who have curiosity and more, recognizing that the current systems, whether they be the corporate financial systems or the government financial systems, just aren't working for them. And it's time to opt out of them and opt into something that is open, transparent, and for everyone.
So the words ringing through my head are egalitarian and utilitarian technology.
Absolutely, 100%. Yeah, but and the most important thing is you can see it. You can see how it was built. You can see the instructions with which it's built. You can see how it runs. You can see the past history of disagreements and how resilient it's been to attacks, both political, government, individual, greed. It's resisted and been resilient to nearly every attack, and there are more to come. But I have no doubt that the model itself, the development model, the operational model, will solve the problems it faces better than any other development model I've seen in my lifetime.
I think that makes it true, and it makes it ethical. From a legal point of view, interestingly enough, all of those characteristics qualify it as property and not a security. And if it didn't have those characteristics, it would flip to a different legal category. Mm-hmm. I was impressed by the block size wars when the small blockers won, and I didn't really understand the significance of it when I got into this space, but now I understand that if the big blockers had won, then the integrity of the protocol wouldn't have been maintained untarnished for the entire 12, 13 years. And that was a very important outcome, I think.
Yeah, the noble incentives of the network persisted. And the most amazing thing to me is that Satoshi didn't have to be there for that to happen. It encouraged enough thinking and questioning and curiosity that it went on and on in terms of mindset to all the developers that worked so hard during those times, and all the node operators, all the people who are using it, people that hold it, and also miners making the realization that this is the right path, and this, it's another validation point of what we're all trying to build just by participating in it.
It's kind of like the ultimate open free market in a way too, because everyone can engage and no one can prevent you.
Yeah, nothing is hidden. And in the Bitcoin community, as you know, there's this saying which is "don't trust, verify," and that's pretty much the ethos that has been consistent throughout my experience of it. And I think it speaks of, again, questioning, curiosity, but more importantly, doing the work to verify outcomes and verify the right outcomes. And the fact that Bitcoin's source and operations is all open and transparent, accessible to anyone, is a significant advantage that you just don't see in any other models. And especially for something as critical as money. Like, money touches every single person on this planet. Exchange of value as a concept touches every single person on the planet. Usually it's associated with a very negative feeling. We hate it. Sometimes we love it in very rare cases. I think a lot of that has to do with the fact that we just don't understand it. We can't trust it because it's hidden behind government barriers or corporate barriers that now are being challenged completely.
It's extraordinary, right? Satoshi gave such a gift to the world, right? What are the odds that you would engineer something like this, release it into the world, have it take hold, and then the founders walk away and leave it as a gift to humanity?
Incredible. And you know, we fixate a lot on Satoshi, and you know, I have nothing but gratitude for whoever this person is, but there's so much work that went into that to get to that moment as well, to get to what you know, Satoshi was able to do. There's a whole background of engineering and science and experimentation and testing to get us to this point. So we constantly, like, the spirit of this is what's most interesting, and the fact that the spirit maintains and grows. And I would just characterize that the spirit is like this questioning curiosity and doing the work to figure out the answers, that keeps going back into the code base, and it keeps going back into the operations. So everyone benefits from that. Everyone can learn something from Bitcoin, even if you don't like it as a monetary system, as an asset. If you hate it, there's some lesson there that applies to anything that you currently do in the world, guaranteed.
Yeah, I'm stunned by this idea of humanity cooperating with the best intentions in a fair, ethical way in order to engineer a better future. And how often do you see that?
Yeah, exactly.
Well, so on that subject, that's a great segue. Let's talk about Bitcoin and Block. What does Bitcoin mean to Block? Tell me about your products, the markets you serve, and the strategy that you're pursuing with regard to Bitcoin at Block.
Yeah, just a little history here to provide context for why Bitcoin has become important to us. So we started, it was called Square. We just recently changed our name. We started Square we had the idea around end of 2008, and started in earnest building a prototype in 2009, January, which is around the same time that a lot of energy in the financial industry was happening. You had Stripe start, you had the Bitcoin white paper, and Satoshi working to the point to release the code and the Genesis block. All during that time, you had the end of this this massive bank failure and just so much greed and corruption on display, which was never held accountable for, and we still live with today. So it was a very interesting time for finance or financial technology. There was just a lot of energy happening, and we happened to recognize a problem, which was, you know, more and more of the US was moving to paying with plastic card. And this is great for individuals because it's convenient. There's a lot of negatives, obviously, with the credit card industry, but the convenience and the speed was amazing. The problem was the sellers could not accept credit cards. And when we first thought about this, we just thought, okay, we're building a credit card reader for small sellers to use. We didn't realize, like, that was just the tip of the iceberg. The real issue was that these folks were being denied from the merchant acquirer, from the bank itself, to even accepting credit cards because outdated technologies to vet them. And so there was a flower cart underneath my apartment where we started the company, and she got denied like 3 times to accept credit cards. And that meant she had to stay with cash. And that meant every single time someone didn't have cash and tried to pay with a credit card, she lost the sale. So we realized in the first 6 months, it wasn't about accepting a credit card. It wasn't about building credit card hardware. It was about helping a seller make the sale. That was it. Participate in the economy. And that's how our company grew, is how do we build tools to enable people to simply participate in the economy? And if we can do that, then how do we help them grow and thrive in the economy as well? So we started with Square on the credit card reader. We built the point of sale because it helped them make decisions. We started lending people money so they could buy a new salon chair, so they could double their business. We created this thing that we wanted to use, Cash App, to transfer money because we had the money rails now. We did it in a very innovative way by forcing the money through a refund onto a debit card. So it was instantaneous, and anyone with a debit card could utilize it. And we actually tried to integrate Bitcoin in 2014. We enabled any buyer on our online stores for our sellers to pay with Bitcoin. We saw very, very few transactions, so it didn't really go anywhere. But we took it up again in earnest with Cash App because we found a vehicle that actually made sense. We started with a very simple model of exchange and buy and sell. We initially, when I first worked on the Hack Week project with a guy named Mike Brock, we had it so that I could store Bitcoin in my Cash App account and then pay with a cash card, and it would auto convert to the merchant into fiat. But we thought it more important to have some sort of psychological break on it. So actually selling it, indicating that I want to pay in fiat was far better than just blindly selling or blindly spending a Bitcoin at the time, especially because transaction fees were quite low. And we did all this in Cash App when we were a newly public company, about a year into being public, maybe a year and a half. We were the first public company to talk with the SEC about Bitcoin and what it meant for us and what it meant for the world. It challenged absolutely everything. It challenged our security protocols. It challenged legal compliance, engineering, product, everything. And even if the product flopped, even if Bitcoin did nothing for Cash App, I'm so grateful that we did it because we learned so much about who we were and who we are and what we're capable of. Because it was an immense amount of work in a very short time frame with significant challenges. So since then, we've continued to pull the thread. We're looking for opportunities to help sellers. We have a lot of sellers on Cash App as well, so they're already utilizing it in some ways, especially as we just integrated Lightning into Cash App. We acquired a music company called Tidal. We acquired it because we didn't believe that artists were getting the right tools to participate in the economy in the same way that sellers weren't getting the right tools to participate in the economy. There's a lot there. You look at everything happening in NFTs, the spirit of it in terms of answering the questions about how artists get paid, there's something there. The manifestation and the implementation, I think, is completely wrong at the moment. We created a open source unit called Spiral, 5, 6, 7 open source individuals who don't get block stock. We pay them in Bitcoin. They get to work on whatever they want as long as they're making they're advancing Bitcoin, they're protecting Bitcoin, they're making it stronger. And they created a development kit called Lightning LDK, or Lightning Development Kit LDK, which allows wallets all over the world to easily integrate Lightning without having to think too much about it. Cash App uses it. It was one of my proudest moments. We started this open source entity as a company, knowing full well that we would probably never get anything back from it. That was not our desire. We had no idea what they were going to do. And in just 2 years, one of our biggest businesses is using what they created. So I think it's a fantastic lesson in terms of doing more open source as corporations. And then finally, we have a new organization called TBD, which is a platform for Bitcoin, specifically a distributed exchange to enable more and more people around the world to get into Bitcoin in a way that the current models don't really allow for. It's still very hard if you're outside the US, Europe, to get Bitcoin, to get onto the network, to participate in the first place. So TBD will be building a distributed exchange that makes it easy for developers to build exchanges all over the world and create on-ramps from fiat into Bitcoin. And once people are on Bitcoin, then we have so many tools to empower people more into the economy.
So yeah, I get the sense like the theme here is financial inclusion. It didn't quite register with me many years ago, but I suppose if you're a small business, an individual, you're kind of unbanked. If you can't take the credit card, the first unbanked were small, mid-sized entrepreneurs everywhere in the world, including even in the US. And what you're doing at Square is you're kind of plugging them into the traditional conventional banking system, right? Via, the
100%.
credit card and the like.
100%. And now they weren't just being excluded. Like only 40% of merchants who applied would get through. We took that number up to 99%. But once they got into the traditional merchant acquirer, there's all this obscurity of information. So the acquirer would not show them how much they'd be paying in credit card fees because it varies depending on the card that the individual uses. So what would happen, we talked to all these merchants where the companies would come in, take their credit card fees in and cause in, that they had not enough money because they run razor thin in their checking accounts. It would cause an overdraft. Then they have no money and suddenly they're hit with a $500 overdraft fee. So like just the obscurity of information was criminal. So we solved the problem of getting more people in and then solve the obscurity of information problem so that they could make more informed decisions around how to grow their business, how to survive in the first place, but to grow their business.
So they're struggling to implement their own back office payment systems. They're struggling to get on the credit card network. They're getting hit with fees from the conventional banking system. Yeah. And Square is giving them a stack of software solutions and services to help them get into the network and then manage their business and avoid being victimized as the weakest player in the ecosystem.
100%.
So with regard to that, tell me about your thoughts about Bitcoin and Square as a strategy. Is there any way that you can grow Square, improve the product offering, or offer benefits or opportunities for small businesses via Bitcoin?
Well, I just going back to that native currency for the internet. Like Twitter is very much an internet company where we could create a website or we could create an app and make it available everywhere. Anyone in the world who finds it can use it. Companies like Square and Stripe are not really internet companies because for us to exist in a market, we need to have a local relationship with a bank. We need to pay attention to the differences in local regulatory environment. So we have to go by, this market by market by market approach. It took us 9 months to launch in the United States because of this conversation with the banks and the networks and whatnot.
How many different markets are there that, from a compliance point of view, that you have to consider?
All of them. I mean, all of them are different. The European Union changes slightly, but like opening up in Ireland is completely different from opening up in Spain, which Square just did. So, each one of these markets, we have to do this market by market. It took us 2 years for Australia, over 1.5 years for Japan. So the issue is that all these markets have different systems. They have different ways of doing things, different currencies, different models. And they all have some degree of obscurity of information as well, which makes development much, much harder. If Bitcoin existed, when we started was at mass, and we can launch something like Cash App, utilizing Bitcoin and Lightning as the transport mechanism, we can be in every single app store around the world today. So it really speeds up our time to market. It speeds up how we can build more tools on top of the network, on top of the foundation, to add even more value to our customers if they find it valuable. So like it really changes it for us. Like if this does become more and more of a means of transport of money and energy and time, then we get to move much faster. We get to open more markets faster. We get to see Square and Cash App and Tidal in more places. And we can be more like an internet company. And even, if Bitcoin existed before Twitter started, I think we would see completely different business models. I don't think we would be as dependent upon an advertising business model. I think there would be a much healthier balance on multiple business models at once instead of this over dependence upon one. I think we'd see a lot less of the issues that advertising systems can bring up in terms of privacy and everything we're seeing around surveillance capitalism as well. So the fact that the internet didn't have this mode of transport and didn't have this protocol and didn't have this currency, forced into very traditional models that became massive at scale and then can become quite dangerous at scale as well. So I'm very excited to see the new models that emerge, because we now have Bitcoin, and we're now the closest we've ever been to a native currency for the internet, which to me like changes everything.
So TCP/IP is like the universal digital information protocol, and that caused all these internet companies to be able to deploy their services everywhere on Earth simultaneously without jumping through compliance hoops and having armies of lawyers, right?
100%.
But you see Bitcoin / Lightning as like universal monetary protocol.
Yeah, 100%. I mean, and probably beyond that. I mean, there was a time early in Bitcoin's history when there was less of a focus on Bitcoin as a currency aspect and just as that transport, and more on blockchain technology. Blockchain technology is amazing, but the network's power is what people do with it and the use cases. And the use case for the internet to have something like this is, I think, as fundamental as TCP/IP or HTTP, SMNP, which is a mail protocol. So these open protocols create companies, they create projects, they create entirely new cultural and societal shifts that I think ultimately lead to more trust and more transparency as time goes on, and diminishment of all these barriers and boundaries that we've erected in the past.
So, if I'm a small business and the benefit of building the Lightning / Bitcoin monetary protocol into the small business applications at Square would be potentially you could roll out services worldwide simultaneously. And second, everybody wouldn't have to route their transactions through credit cards and individual banks, which then terminate at a central bank in each nation, which means that all the small businesses could trade with each other, I suppose, everywhere in the world. So it's like the fees get driven down by a factor of 1,000. The world trades with each other, and then it would create maybe an acceleration in product development, because you don't have to rebuild the feature set 97 times and run it through some complicated compliance review and then negotiate with a bunch of counterparties. But is that right? I mean, am I being
100%? I think the biggest point in what you just said of what is so important is all that is transparent. I can see the fees that Bitcoin imposes on me, and I can determine why they're at that particular amount, why they're high, why they're low, based on what's happening within the network. So that level of transparency builds a lot more trust. It also builds intent and incentive to make the network even more efficient. What causes greater efficiencies, or make it even more secure? How do we add protections or anonymity or privacy? So all these things being transparent clearly display the problems, whereas in the typical financial industry, and especially corporate finance, those tools, they're all in a black box. You can't see anything. You can't see how they work. You can't see how they're priced. And I think that goes such a far way in terms of usage over time. Knowing a system is definitely a great incentive to wanting to use it more and more, because you trust it more and more.
So I guess I sense a theme here with if sellers were excluded from the economy and Square's application services, empowered them. Is the idea behind Tidal to empower artists to participate in the economy and give them control of their own destiny in the same way?
100%. Like we on the surface, it looks like a financial company bought a music streaming company. And what's interesting about Tidal is that Jay and the team have always been focused from an artist perspective, from a musician's perspective, and the lack of fairness in the model right now. So Tidal pays out more than anyone else, but we're also doing things that kind of question the fundamentals of how artists have been paid in the past. But certainly there's no gap in streaming music or podcast today. You have three massive players, Amazon, Apple, and Spotify. We don't have any, strong hope that we're going to compete on that ground. What we do think there's an open space around is artist tools, and how they create, how they collaborate, how they find each other, how they participate not only in the economy but also in the music space. So a typical artist today does not get that much from streaming revenue. They get the majority from merchandise and touring, and Square has commerce sites. We can integrate those right in the title, make it easy for an artist to start one up immediately, but also make sure that they are open and free to, be consumed and listened to on every other single platform out there. There's also a lot within just the streaming use case, and the format that is interesting. This is where I think the spirit of NFTs, there's something, it's the right question to ask. We currently have the wrong answers. The question around contribution to artists, that particular question is interesting and definitely the right one to ask, and one we're asking a lot, but to do so on a much better foundation. And I think, we're what's exciting to me is we talk so much around layer one Bitcoin. We talk a little bit around layer two and Lightning, but there are layers on top of that as well. And this is a foundation that can be utilized for so much exchange of value. It doesn't have to be purely limited to what we consider it to be today. So I'm really excited about, those. I don't know if they're who can define what a layer three or layer two is at the moment, but there's something else there on top of these fundamentals that I think allows us to re-envision something like how an artist gets paid and how they connect with their fans, and what that relationship ultimately is. And there's some very specific practical problems in there that we're working on right now.
Is it like an extraordinary passion in the world today to own yourself? The artists want to own themselves, and that's driving NFTs, and the musicians want to own themselves. And can you give me some autonomy or some sovereignty versus big tech or versus big finance? And how can I live my life and create beautiful things and be fairly compensated? And so I think Square and Tidal tap into that. Now talk about layer threes. I think the big layer three, maybe the most successful layer three on Bitcoin, is Cash App. When I think about it, let's talk about Cash App, because it's an extraordinary success. I mean, haven't you sold more than $10 billion worth of Bitcoin through Cash App? Tell me about Cash App and Bitcoin, and also the Lightning integration, and what you've learned, what you've seen, what your plans are there.
Yeah. Cash App is I think for anyone in a company, there's always these moments when you have to be prepared to lose credibility, and you do so by taking risks that you believe in. So Cash App was something that everyone in the company at the time we started it didn't think we should be doing, including one of our former colleagues who worked at PayPal. Said that problem has been solved, and peer-to-peer transfer will never win. And we wanted it so much that we continued to build it. And for 4 years, 3 or 4 years, it was just a very hard slog where the company wanted to kill it. We weren't seeing much traction in the market, but and every one of those days I went on, I was losing credibility, which I was hyper aware of, defending this thing. And I, eventually, the team found a model and made it work, and they unlocked it. And some of these things just need time and space. And the same is true for when we put Bitcoin into Cash App. It was another one of those, okay, I'm ready to lose a bunch of credibility. No one believes in this thing. No one believes it should be in Cash App. Some people think we're being either reckless or irresponsible with the world if we integrate this, and all those moments kind of add up, but you power through, and you see it through, and the market responds in a particular way, and the market responded with Cash App because I think the magic of it is it's not just about one thing. It's, if I have a need to send money to my friends or my family, I can use Cash App. If I have a need to buy Bitcoin, I can use Cash App. If I want a card that I can use anywhere at ATM, I can use Cash App. If I want to buy stocks, I can use Cash App. So our model is around this ecosystem. Like, how do we build an ecosystem of financial tools that positively reinforce one another? And Bitcoin is a big part of that. And the team within Cash App, the Bitcoin team within Cash App, is extremely principled and focus on education and focus on doing things the right way and not rushing things and not doing things too soon, but making sure that there's desire for it and need and necessity, and then seeing it through. And we've seen all that with our implementation of Bitcoin and Cash App, and we're excited to do even more. And what excites me the most is we're challenging ourselves. We're challenging even the Cash App model. So we announced that we're building a Bitcoin wallet, hardware wallet, which is non-custodial. Cash App is obviously a custodial wallet. I think custodial wallets and services like Cash App are great to start with. But again, to your point, like, people want more of that feeling that they own it uniquely. That goes into a non-custodial solution, and we're building this thing in such a way that we'll have this incredible off-ramp from Cash App into something that just works as a non-custodial solution as well. And most importantly, we've learned from Bitcoin. We're open sourcing the whole thing, including the industrial design, so that anyone can build whatever we discover and find out. And we're going to compete on quality and compete on build and compete on services around it that I think are valuable, like different models of security, potentially, where you don't have to do as much key management is one such model. But there's others, obviously, including around analytics and whatnot. So I think we're striking the right balance of starting with something that is critical and then kind of expanding in a way that gets at what the technology actually wants to be ultimately. And we learned all that through Cash App and Bitcoin.
How many people use Cash App? Like, what's the silhouette of that product?
Oh, we have a earnings coming up soon, so
I'll tune in for that.
Listen to those numbers then.
Okay. A lot, right?
A lot.
So you've got a custodial wallet, and I can buy stocks, and I can acquire cash, and I can acquire Bitcoin, and it's super slick and super easy to use. And I use it. I think it's just awesome. It's kind of sets the standard for how you ought to do a really good mobile digital wallet. And the difference here is, you're thinking you're going to give people the ability to take their Bitcoin and take it off the Cash App network and take self-custody. And that's something that's not going to happen anytime soon with your Apple stock or any kind of security, right? I mean, maybe, I don't know, in theory, anything's possible, but I don't see it happening anytime soon, maybe ever. I don't know. And even if you did, what would it mean to take personal custody of a stock certificate? You still just own a share in somebody else's company. You don't own your own property.
Exactly.
And so really the deep idea here is, I guess, Cash App is kind of the on-ramp, off-ramp, or the tool for the consumer, and then they can get self-sovereignty of their own property.
Yeah. And it's about choice. Like, I might feel more comfortable paying a company like Cash App, which is effectively what you're doing. You're paying Cash App to secure your Bitcoin, and that comes at at some cost and trade-off? Or am I feel comfortable putting my Bitcoin into a wallet and I secure it, and I'm confident in my abilities to do so, or I use a service to help me with that, key management. So I think the more choice, the better, and certainly we're going to learn a ton. The more choice we give people in terms of where we're failing, if people choose to move it off Cash App, and why they might keep the Bitcoin in Cash App. Why is that? Maybe it's because of Lightning. Maybe it's because the world becomes more transactional with Bitcoin, and therefore Cash App is like the easiest, fastest way to exchange that value. I don't know yet, but we're going to be open to answering those questions in a principled way.
And the ability to take possession of your own property, your own digital property like Bitcoin, is what separates Bitcoin apart from most other digital securities and the like. But your openness to being willing to let people take self-custody is what gives the entire ecosystem a certain ethical, moral superiority against alternative investments or alternative assets. And from my point of view, it's what allows me to think out 100 years and think this has the ethical, the ethical and the moral superiority that makes it durable for a century. And I don't feel that way about other forms of digital securities or the like.
Exactly. It's predictable. It's deliberate and it's predictable. I mean, Bitcoin gets a lot of knocks, especially in the mainstream media, the technology mainstream media versus Ethereum in terms of speed of development. Ethereum moves very, very fast in comparison. But it's a question of, what is the ultimate outcome of those moves? Bitcoin is very deliberate about what goes in and what stays out. And that does mean it's slower, but those slower things tend to last. And they tend to be a whole lot more predictable in terms of the direction they're going. They tend to be a lot more secure. They tend to have far better uptime and usability than anything else. And that's not to say that there's a ton of great ideas in the sandbox everywhere and happening in all these other projects. They're great sandboxes that will test ideas very, very quickly. But that deliberateness is what makes Bitcoin, to me, the potential for this internet's native currency, and gives so much confidence as a business owner, as someone running one of these companies, that it's going to stick around, and it's going to serve billions of people throughout decades going forward.
Yeah, you can have lots of innovation at layer 2 with projects that compete against Lightning, or layer 3 with applications that compete against Cash App. But I don't have to speculate about who's going to inherit the Block Corporation in 100 years. If I do business with you now, I have the option to take my level 3 assets to a layer 2 to a layer 1 and give them to my grandchildren. And that makes all the difference, I think.
The focus should always be on the protocol and owning in some way the protocol.
So let's talk about speed then. Lightning. Lightning's an open, permissionless, non-custodial, high-speed protocol. Bitcoin is the similar sort of a low-speed, durable protocol. How important is Lightning? How do you view Lightning versus your, Cash App has a proprietary layer 3 way of moving Bitcoin around, and then you've got experience with Lightning. No one's more qualified to opine on the benefits of centralized versus decentralized payments than you.
When we started Square, one of the things that we found was every time we demoed the product, I took out my phone, I put the reader on the headphone jack, and I swiped someone's credit card, they would say, "Wow." And that wow was like the speed, like how did you just do that? It felt like magic. That's kind of the feeling you have when you do your first Lightning transaction for something real, whether it be a digital good or a physical good, which is happening. These physical goods accepting Lightning is just happening more and more. And it's not necessarily, certainly the speed is a big part of it, but just the fact that, for instance, I just fired up a miner in my house, an ant miner in my house, and it's just chugging away, and it's sending all this Bitcoin to Slush Pool, which then sends it to my Moon wallet, and then I can take my Moon wallet and I can go out and I can buy a taco. And just the fact that I was able to do that is incredible.
Big smile.
It's a wow
Smile
moment.
to your
It's
face.
like, wow, it changes everything. I mean, it literally changes everything. And that didn't go through a bank. That didn't go through a government. That went from a hugely complex, but self-regulated calculation and solving of a puzzle to an open network, open protocol that I could see every single part right to the hands of a seller. That's amazing. So I think Lightning makes Bitcoin even more accessible, especially to smaller sellers. It certainly makes it more convenient to individuals because they don't have to wait for a transaction time that is 8 to 10 minutes. And we're getting an opportunity to see a grand experiment at scale in El Salvador, where you have a closed loop economy effectively. And I think we're going to learn a lot from that, to better Lightning, to better Bitcoin, and to better this concept of this open monetary system. And I think those lessons will be very important as we continue to scale this around the world. That famous Webb Gibson quote, "The future is already here. It's just not evenly distributed." There's probably a big part of the future happening in El Salvador right now that's not evenly distributed around the world, and little by little, it will be. It may not be the manifestation that we see right now, but the spirit of it is probably going to rhyme with what we see in other countries and certainly in the future. So Lightning and Cash App is just another one of those iterations that allow more people to use it, make it more convenient for more people, and that just increases the accessibility of the network and what we're all trying to do.
Yeah, you've got the Lightning SDK to make that available to corporations. Do you think Lightning is going to spread to all the other crypto exchanges or digital wallets or the like, or how do you see that playing out?
I think it goes back to, like, Bitcoin is very, like, practical and utilitarian. So if it makes sense from a utility perspective, absolutely. We just wanted to increase the probability that people could integrate it. And that's what the LDK is. It's just increasing the probability that if I need Lightning, I can do it very quickly. And I imagine the answer is 100% yes, like it spreads everywhere, but the probability of it spreading before LDK was quite low because of the complexity of integrating Lightning in the first place. So it team did an amazing job.
Do you use your own product in Cash App to put Lightning into Cash App?
Oh yeah, 100%.
That was probably the big thing, right? I mean,
well,
that's
I mean,
such a strong.
The big thing was, like, we started this, like, I asked my colleague Mike, like, what is the biggest thing that we can do for the Bitcoin community? He said, hire and pay 5 open source developers to work entirely on Bitcoin, whatever they want. We did it. We called it Square Crypto, and it's now called Spiral. And they decided, this guy named Steve Lee hired a team, and we even said, like, if you all want to work on 5 different projects, do that. They decided to work on one project, which is this Lightning development kit. And within 2 years, they had it out to multiple wallets, made it available, and wallets started adopting it. But what's even more, what makes me proud is, like, as Square, as Block, we were never expecting to utilize anything from them. Like, if we did, amazing. But within 2 years, Cash App was built on their framework, which was completely open source and not directed by the company, not directed by a corporation, and we benefited so massively from it. So if there are any companies out there that are considering funding open source, whether it be an internal team like we did, or just the projects that you appreciate, definitely do it. Like, have some amount of your portfolio dedicated to funding open source development.
So Let's move on to the last topic, Bitcoin for corporations and your advice. What kind of advice would you have for a corporation thinking about plugging Bitcoin into their business, and what kind of opportunities do you see?
I think for even if you don't use or don't believe you could use Bitcoin in your company, I think it's worth your study because there's a number of lessons in it that will make your company better. How you operate your company, how you interact with the world, how you think, how you execute. I've just learned so much from it that have made everything about my company and what we do much better. And if I were to start another company, those lessons would just be so great. And then as we talked about, like, Bitcoin is very utilitarian and practical. You don't necessarily have to build anything into your products or services that are Bitcoin oriented unless you feel that there's a need or there's an efficiency or something that is going to be helped. But it certainly has many it solves many problems in very different ways. I mean, you are famous, Michael, for solving one of your problems in a very specific way in terms of buying more and more Bitcoin based on a problem that you saw and a very creative solution in what Bitcoin provided you as that solution, as that answer. And I think that was brilliant. I think it's genius. And certainly that's one path for many companies watching this. And there's another path in terms of what we've done at Block. We're a financial company. We're building financial tools. There's obvious intersections. There's something like Twitter, which has a base of people using it that are global, that need that, for us to enable something like tipping all around the world, they need a global understanding, shared understanding and awareness of one currency. So it makes sense. It's small today, of course, but it'll grow because the use case is there and it's important. So I would just look critically at your business and what can you learn from Bitcoin? Number one, that would make your business better. I think there's a ton. And are there any practical applications within either purchasing it or building it into your products or utilizing it or providing services for it, which I think is the real value going forward, especially for financially oriented companies of the services around the Bitcoin ecosystem. I think there's a ton of potential there.
If you look at fintech and social media companies over the next 3 to 5 years, do you have any thoughts or a forecast for how rapidly they'll get involved in Bitcoin or to what degree they might?
Well, I mean, look at, I obviously I don't know Facebook / Meta's plans, but look at this whole thing with Libra and then Diem. I think there's a ton of lessons in. They tried to create a currency that was owned by Facebook, probably for the right reasons, probably for noble reasons. But there are also some reasons that would indicate trying to get more and more people into the Facebook ecosystem. And they did that instead of using an open protocol and standard like Bitcoin. And I think, hopefully they learned a lot, but I think there's a lot of wasted effort and time when those 2 years or 3 years or however long it's been could have been spent making Bitcoin more accessible for more people around the world, which would also benefit their messenger product and Instagram and WhatsApp and all these things. We have this open network right now and it's usable. It's not accessible to everyone. It's usable. The easier we make it, the faster we make it, the more approachable we make it, it's going to better everything, including everything that Facebook intended to do with Libra. So, yeah, I mean, I think it changes a lot, but we just have to be open to not having to own the thing. You don't got to own it to get value from it.
So the real message is study the protocol, understand the protocol, embrace an open, permissionless global protocol, you built a bunch of proprietary applications on top, like Cash App, that were enormously successful. They've been great for the company, but you also leave an open protocol, and you're supporting the open protocol so people can take possession and you can be compatible.
Yeah, and giving back to it, like making sure like all of our products, all of our Bitcoin products going forward, TBD, the Bitcoin miner we're doing, the Bitcoin wallet we're doing, they're all open source. They're all going to be made in public because we've learned. I've learned a lot leading a company and building a company, and I've learned a ton for Bitcoin, and we're hard forking down to the Bitcoin path.
Awesome. Look, I want to thank you on behalf of everybody in the Bitcoin community, and thanks for sharing your wisdom with us today. You have any final last words for the group?
Well, I mean, anything you learn from Bitcoin or at this conference, I mean, we only get better as we share it. So get active within your companies, get active within your communities, share your ideas. No question or ideas is dumb. Some of them have been asked before, but there's always new angles and insights that we can learn from. So the more conversation about this, the better, especially the things that you're afraid of, because it allows us to address those things in a much more thorough way.
Yeah, well, I leave this conversation with just new source of energy, and I'm thinking about what a beautiful future we have here if we all work together.
Yeah, we do.
Thanks.
Thank you, Michael. Thank you all.
Okay, thanks to everybody, and all the best.
Hello, everyone. I'm excited to host the second segment of Bitcoin Corporations, where we dive a little bit deeper into Bitcoin treasury and how corporations might consider integrating Bitcoin into their organization. I just really enjoyed the last conversation between Michael Saylor and Jack Dorsey. It's great to have two brilliant minds speaking together on the topic of forwarding Bitcoin. And one of the last things Jack said really defines the ethos of this conference and why we're about to have this conversation. He said, if there's anything you learn about Bitcoin in general and at this conference, we only get better if we share it. And so this is about sharing knowledge that MicroStrategy has gathered over the last couple of years by putting Bitcoin on our balance sheet and also working with partners like Deloitte at looking at different options as we went through this journey, being the first publicly traded company to put Bitcoin on our balance sheet. And obviously we've done it in a big way. So before I get started, I just wanted everyone to quickly introduce ourselves. My name is Phong Lee. I'm the president and CFO of MicroStrategy. Amy?
Thanks, Phong. I'm Amy Park. I'm an audit partner at Deloitte's national office. I spend a lot of time on crypto accounting. Looking forward to today's discussion.
Excellent. Rob?
Hi there, Rob Massey. I'm a tax partner at Deloitte, focusing exclusively on digital assets, collaborating with you and Amy and Phong, Jeremy, Ming. Looking forward to this conversation.
Thanks, Rob, and thanks, Amy, for being here. Ming?
Hi, my name is Ming. I'm the general counsel of MicroStrategy. I've been with the company for over 20 years now and have worked extensively with all the people on this call on our Bitcoin treasury strategy, and look forward to sharing some of the insights and experiences we've developed.
20 years. So that means 10% of your career has been focused on Bitcoin.
Yeah, that's about right.
The last 10%, let's say. Jeremy?
Hi, Jeremy Price, Senior Vice President, Financial Planning and Analysis at MicroStrategy. I'm responsible for all the company's treasury functions. And I haven't been here quite as long as Ming, 18 plus years, but almost got 20. So, and very closely involved with this team in our Bitcoin strategy.
Awesome. So we're going to jump right into this. And last year, for those who joined our conference, we really laid the groundwork for how a corporation would want to think about entering into a Bitcoin strategy. We talked about legal and regulatory framework, accounting, tax, custody, exchange. And as you know, we open source quite a few of the documents that we used, our working documents, if you will. This year, the intent is not to rehash all of that, but really to cover things that have changed, things have developed in the last year, and things we've learned. So in that respect, I'm going to start right off with you, Ming, and just let's talk about what has changed in the last year as it relates to the legal and regulatory framework of Bitcoin, as it relates to corporations.
Thanks, Phong. And I think that's a really good question to start this discussion off with, because Bitcoin and digital assets generally have been in the news a lot over the last year, and there have been some significant legal developments. For example, there are some new ETFs that got approved recently for the very first time. There are also some ETF applications that did not get approved, and it's unclear if and when those are going to be approved and under what conditions. It's also pretty clear that there is a growing amount of interest and activity at the SEC, in Congress, even at the White House, to clarify and establish maybe new rules and regulations governing the digital asset space. And so with all those things going on, I think it's a very fair and reasonable and good question to ask here at the outset, whether there have been any changes to the legal framework for a buy and hold strategy. The fact of the matter is that there really haven't been any over the last year. And maybe a good, just very brief way to explain why that is to wind that clock back to a year ago when we did the first Bitcoin Summit. We held a panel discussion that focused on the 5 main legal lessons that MicroStrategy learned in implementing its buy and hold strategy. By the way, that video, I think, it was recorded and it's still on our website. So for those who are interested in that broader discussion and didn't see it, you can find it on our website. In any event, in that discussion, we laid out the 5 main legal lessons that we learned, which I think form the general legal framework for a buy and hold strategy. I'm not going to go through all of them here today because we don't have that time or opportunity. But what I will say is that all of them remain valid, and there really haven't been any material changes to them. Now, having said that, I think there's one lesson, the lesson about regulatory considerations, that's worth recapping here because it's just so important to the overall legal framework. And that is that if you're a company that's merely buying and holding Bitcoin on its balance sheet, there really aren't many regulations that directly apply to you. It turns out that there are some Bitcoin-related activities that are highly regulated. So, for example, if you're offering a service that enables people to buy and sell Bitcoin, or you're offering to custody other people's Bitcoin, there are a lot of laws that directly apply to you. Anti-money laundering laws, commodity regulations, potentially money service business laws, et cetera. And that makes a lot of sense because those laws are there in part to protect the users of that service. But if you're just doing a buy and hold strategy, those laws typically aren't going to be directly applying to you. It's going to be the vendors that you use who are going to have to be mindful of and comply with those regulations. And so it does behoove you to engage reputable, sophisticated vendors to make sure that the transactions you're involved in are legally compliant. But again, those aren't laws that are going to be directly applying to you. And that's an important operational distinction. The other really important thing I just quickly want to say here and emphasize is something that Michael actually said in the last presentation, which is it's really, really helpful that Bitcoin is not considered a security. The SEC has this test, a 4-part test called the Howey test, that they use to determine whether something's a security or not. Well, it turns out that Bitcoin does not meet at least one out of those 4 parts of that test. And so it's not considered by the staff, the SEC staff, to be a security. And that's a really, really big deal. Because if Bitcoin were considered a security, then all the security laws would apply to Bitcoin-related activities. And among other things, for a holder of Bitcoin, it would mean you'd have to take into account things like the Investment Company Act. But if you're a company like MicroStrategy, who is holding Bitcoin on its balance sheet, even a lot of Bitcoin, because it's not a security, you don't have to think about things like the Investment Company Act. In any event, all that stuff that I just mentioned about the regulatory context was true a year ago. It's still true today. And Fong, that's why it's a main reason why I can say that legal framework hasn't really changed in the last year.
Excellent, Ming. Thanks. Anything anyone else wants to add on this topic? All right. So I guess the other piece, you started going down this path a little bit. Bitcoin is different from other, I'll call it digital assets, for one reason you mentioned, which is it's really considered property, not a security. Is that true with other coins, or what's the view outside of Bitcoin?
Yeah, so let's take a first step back a little bit and just compare it a little bit to typical or conventional investment assets. So Bitcoin is really unlike traditional assets. If you take, for example, stocks, bonds, and real estate as being classic examples, in that Bitcoin doesn't represent an obligation to an issuer or a debtor. It's not physical. It's not a physical asset. And when you transact in Bitcoin, there's no registration statement. There's no private placement memorandum. There aren't even any financial account terms and conditions to do those transactions. But separate and apart from that, even with respect to other digital assets, Bitcoin is quite unique, right? When it was released in 2008, for example, it was really the first decentralized digital asset in history. I forget that sometimes when I'm just thinking about Bitcoin, but that's true. And maybe in part because of that, it is the most well-known digital asset. It's got the highest market cap. It's almost $1 trillion today. In some past periods, it's been over $1 trillion. It's famously limited to 21 million coins. It's a hard cap. A lot of other cryptocurrencies do not have a hard cap. And then unlike many other digital assets, nobody controls Bitcoin, and yet everyone can use it. And I think that's a really simple layman's term way of explaining why the SEC in part doesn't view Bitcoin as a security. And that's probably not true with respect to a lot of other cryptocurrencies. There's one other unique aspect of Bitcoin I do want to highlight, and that is that Bitcoin, when it was created, was very much purpose-built, right? It was designed to be a means of payment, a store of value, a unit of account, right? And that's just not true of a lot of other cryptocurrencies out there. Take, for example, Ethereum or Solana, right? They're much more like virtual computing, operating systems where you can, build applications on top of or with it. Bitcoin, on the other hand, right, was really meant to do those things I just mentioned. I think that's why it's widely viewed as a store of value, like digital gold. And that's why MicroStrategy, of course, is most interested in it.
Maybe I can chime in. I couldn't agree with you more, Ming. I think when we think about Bitcoin, it's that focus, right? It's the focus of a platform and an asset. It enables a store of value and a transfer of that value very efficiently, and it is that focus versus other platforms, and it can do that, and they facilitate, they inspire people to build stuff on top of decentralized applications and other things. I mean, it's a difference in maybe the way the architecture, right, and the focus of that. Like if you have a fork, right? If you catch it, there's a little pun built in there, right? You use a fork to eat pasta. I'm Italian, right? I can try and eat soup with this. It's not very effective, right? But this is like, choose your protocol, choose your asset carefully as to what it does, the different attributes. So that's people talk about this a lot, debating and contrasting the attributes, but I think that's where it goes. The other thing I'll latch on to very, very briefly, Fong, is, Amy and I play the game a lot. What's the thing? And so where Ming was talking about what do these digital assets mean in terms of the SEC or other regulators, they mean something unique for tax and for GAAP accounting and IFRS and all the rest. And so you really need to say, what lens are you putting on these things? Make sure you got it right, because it does have different implications. Not all digital assets are treated equal. And also the way that you're using them, they may have different implications depending upon what regulator you're thinking about. So just a little added color.
Hey, Fong, one thing I would just mention, just given a lot of the uniqueness around Bitcoin, I do want to take the opportunity to emphasize the lesson, or one of the lessons we talked about a year ago, which was the importance of corporate governance. It really is something that you do have to study, you have to learn up on. And for many of the reasons that Rob and I just talked about, you need to think about, what's its role going to be, right, with your business? Is it just going to be a treasury asset? Or are you going to use it for other purposes? And it does have these different statuses under different regulatory regimes, right? Under tax, under the CFTC, under the securities laws, et cetera. And so the company really does benefit itself by starting off doing that learning early for governance purposes.
Yeah, I think it's a fundamental point. And a lot of people approach digital assets as an individual, and the obligation of owning a digital asset as an individual is a lot different than if you are a corporation, a lot different if you're a public company, which we are. And so knowing what that thing is, that game that you play in tax and you play in accounting, you play in legal, it's actually fundamental. Before you figure out where you want it to integrate into your strategy, you have to understand these individual things. Is it a fork? Is it a knife? Is it a spoon? And to understand them, there's a lot of an onion to peel back, right? And you sort of have to go back to what was it originally intended to do. So I think it's fascinating. Now, Rob, did you actually have that fork ready for that analogy, or did you come up with that analogy on the fly?
It's lunch. It's lunch.
I'm hungry, so I'm getting ready for lunch. It's going to be pasta. Yeah.
Yeah. So Ming, on that point of sort of, as a corporation, there's a lot you need to understand before you sort of go into this. You want to share a little bit about what have we updated in terms of some of our open source documents that we provided last year? Because a lot of, if you read through those documents, you start to understand the thinking we had to go through before we entered into our Bitcoin strategy.
Yeah. So a year ago, as Fong was just mentioning, we open sourced and published on our website probably half a dozen documents that are based on our experience that we thought might be helpful to others who are interested in doing something similar. Those documents included a project roadmap, our very own Treasury Reserve policy, our Bitcoin trading policy, and I think a handful of other documents that outline the main legal, tax, and accounting considerations. The great news for us is that all of those documents have really, stood the test of time. We've really not had to modify them in any material way. To the extent we have updated and modified them, we have open sourced the latest versions. I think they're available now on our website. But they've been terrific. We're hoping that they're going to be helpful to other people who are interested in something similar. Now, there are a couple of updates that I would mention. One is a new document that is essentially a checklist for the considerations in engaging with a digital asset payment processor. We had occasion to deal with one in 2021 because our outside directors made the decision to take all of their board service fees in the form of Bitcoin rather than in US dollars, which is what we had been paying them in. And they did that because they wanted to show support for our corporate strategy around Bitcoin, and also to show support for the long-term, sort of the proposition of Bitcoin as a long-term store of value. And so to implement that, we engaged with a payment processor who would take on a quarterly basis the US dollar amount that we would owe our outside directors in the form of board fees and convert them on the payment date into Bitcoin. And so this document just helps to outline some of the considerations that we went through in engaging with a digital asset payment processor. I think, Jeremy, you may have some, probably more knowledge about how it works mechanically, but from my vantage point, it seemed like a very straightforward process. I think our outside directors formed or created electronic wallets, and it all seemed to move pretty smoothly. Would you say that was the case?
That's right, Ming. Look, I think first, our strategy of acquiring and hodling Bitcoin obviously has influenced how we approach Bitcoin transactions. So as we made the change to pay our outside directors using Bitcoin, it's important that the company didn't have to transact using our existing Bitcoin. It would kind of be inconsistent, right, for us to turn around after acquiring the Bitcoin and saying we're going to hold it to then use it for payment. And so our use case is pretty straightforward, as you outlined. We've essentially engaged a payment processor to transact with our outside directors. So the company established an account with that payment processor, similar to how many companies work with respect to payroll and paying, wages to employees. And then the company distributes or disperses fiat currency into that account with instructions on how to allocate the funds across the recipients, our outside directors. The outside directors also work with that payment processor to provide the wallet address or addresses that they wanted to have their Bitcoin deposited. And then the payment processor takes the fiat currency that we send and transfers it to Bitcoin into the directors' wallets. So the company never actually acquires any Bitcoin in the transaction. It's purely us funding via fiat and then the payment processor settling into the directors' wallets with Bitcoin.
Thanks, Jeremy. Thanks, Ming. So we're sort of moving into the area that's a little bit newer for MicroStrategy, which is Bitcoin for payment purposes. And obviously, you can also receive payments in Bitcoin. I see other companies doing that. Maybe this is a time for Rob or Amy. Tell us a little bit more about, beyond MicroStrategy, what you're seeing happening in the Bitcoin for corporations world.
Yeah, thanks, Fong. I can start, and then Rob, feel free to chime in. For sure, we saw a lot of companies as MicroStrategy started the trend to look at investing, but the investing quickly turned into, well, what else can I do with my crypto? And I think a lot of that was driven partially by market demand. So you have a new class of customers who are eager to pay in Bitcoin or pay in crypto. I think now you'll see a lot of times, if you're buying something online, there's usually something there that says pay with Bitcoin. And so we definitely, at least at Deloitte, have worked with a lot of companies who have just asked, I have customers who now want to start paying me in Bitcoin. How do I do that? I'd say it ranges from two populations. One are companies who have already kind of engaged and started dabbling in crypto. And so they're ready kind of to take the next step and have thought through some of the considerations similar to what MicroStrategy has thought through of what do we do when we're starting to use it now as a form of payment. And And then we have the other class, or the other side of companies who maybe haven't really started to hold or do anything with respect to crypto, but now are seeing the demand, from different customers who want to, start paying in crypto, as well as, vendors who also want to get paid in crypto, et cetera. We're seeing some interest as well for some of the native crypto companies who want to do advertising and say, I'd like to pay for that advertising in the form of some type of crypto. So we're definitely seeing a lot more questions. And to your point, a lot of the things that MicroStrategy has started to think about, and that we talked through last year in terms of the overall getting the whole organization together, thinking about governance, educating yourself, all the different considerations, those are all still very relevant to, the people who are starting to think about it as a form of payment. There are some follow-on considerations specific to accounting and tax, how you contract that, the terms potentially, you could have embedded derivatives in there, which I say embedded derivatives and everybody's like, I don't want that. But there are some additional follow-on, but the base of, the groundwork of what MicroStrategy has done and what we've talked through over the last year is equally as relevant to those folks as well.
There's a lot to think about. And, you guys did a good job of getting ahead of it and being very thoughtful and being able to carefully consider, who you're working with, how do you contract, which payment processor, what does the cadence of hygiene look like when you're going to interact with digital assets as a mode of payment. A lot of our clients, they get caught off guard. It's like, oh gosh, there's this really important customer. They want to pay us in crypto. How do we do that? And then they're kind of backed into a corner. Or there's a vendor that's critical in your supply chain for various reasons, and they have a need. And so I think, of course you can do it quickly, but it makes sense to get ahead of it. It seems like it's a trend which is going to continue down this path. And you want to have the range to be thoughtful about the considerations and not get backed into a corner.
So we MicroStrategy started with Bitcoin on our balance sheet. We started then as the next step to use it for payment purposes with our directors, and we may do more things beyond that. Are you seeing it go the other way around? Are you seeing companies who are receiving payment or making payment in Bitcoin then start to integrate it into their balance sheet?
Yeah, it starts from a few different places, right? It'll start by saying, wow, there's this really important customer that wants to engage. I wonder if there's something there. And then it starts with, okay, let's just convert it to fiat real time because we don't worry about the volatility. But then there's a thoughtful treasurer that says, hold on a second, should we take a chapter and learn something from MicroStrategy? Why are they doing it? Should we consider that? What should we tell the board? So I think these are questions that happen quickly. So you want to arm yourself with a really good answer. You see people get inspired because there's a really important customer that wants it, or a vendor, or their treasurer, and then it quickly rounds out and says, what are the other reasons to do or not to do this, and to keep an open mind. Again, you're taking lessons from you and your bold moves. That's Amy. Anything else to add?
I think it depends on the company too. I think what a lot of people are seeing is that, hey, we can accept it from our customers even if we don't want to hold it. And, you can use a payment processor who will do similar to what Jeremy, you and Ming just talked about. But it's that, like, knowing that you can, and that education of, okay, why do we, maybe as a company, we're not ready to have it on our balance sheet, or for some reason we don't want to. That's company specific, right? After thinking through all the different considerations. But I think the process of understanding how it can be done and that it is manageable is getting out there. And I think we'll see more and more companies who are starting to look towards, continuing to do that, and then potentially expanding it into, well, look at how MicroStrategy has done, or look how others have done when they've started holding it. Should we diversify our assets? Should we start including some of it? I think those are the follow-on conversations that we're going to be hearing.
Great, thank you. So let's move on to our next topic, my favorite, least favorite topic, which is Bitcoin accounting. And Amy, I know you and I have talked about this at length with our finance team of how Bitcoin is accounted for, but maybe just let's do sort of the quick recap and then talk about where we think this is going.
Well, I'm guessing, Fong, it's your least favorite because you don't like the Bitcoin model. And the Bitcoin model is that
You said it. You don't like the Bitcoin model, Amy?
a lot of people don't like the Bitcoin model.
Okay.
Basically, you have to account for it as an indefinite lived intangible asset. And so what that means is every time the value of it goes down, so when it's traded on a public exchange, and you can see it at an active and orderly price, you have to write it down, but you never get to write it up until you actually ultimately sell it. So for a company like MicroStrategy, who's long-term buy and hold, you're not going to realize any future appreciation until you actually sell the crypto. That leads to a lot of challenges because people think economically what I should be able to, value my asset is what somebody else is willing to pay for it today. And so, I think there's a lot in your camp who don't like that model. Unfortunately, that's where GAAP kind of takes you if you go through the different definitions of what currency is, inventory is, financial asset or financial instrument. But I will say industry and practice has pretty much coalesced and agreed that is the model. You won't see a lot of companies who have financial statements where they're accounting for it outside of an intangible asset. Now, I will say there are certain entities that have special accounting. So investment companies have to account for all their assets at fair value. Broker-dealers get special accounting, but general corporations, you're not going to see much in terms of straying away from this intangible model.
Okay, so you don't like the accounting. It's good to understand your view. I'm just joking. So there was an open comment period. I think it was about 6 months ago or so that the FASB, had an open comment period on multiple accounting standards, and I think somewhere in the range of 500 folks, responded to the FASB that this is something they should take up and address. How does that process work? Where are we in that process?
Yeah, so thanks, Fong, reminding me. There is hope for potentially a different accounting model. If we take ourselves back to last year's conference, I had talked about the FASB meeting publicly in October of 2020, right after MicroStrategy made their initial investment. And the board at that time voted 7-0 not to add a project onto their agenda. If you look at where the market and the activity has come since then to now, obviously there's been a lot of change, a lot more companies, a lot more public companies as well, who are holding material positions and just a broader interest in digital assets in and of itself. So the FASB has a process called an invitation to comment. Basically, they reach out to all of their stakeholders and say, hey, world, tell us what you want us to work on, because the whole purpose of the FASB is to help standard setting for all their different stakeholders. And a lot of times that process happens when you have a new chair. And so we have Rich Jones as a new chair that's come in recently, and it's really to help him formulate his agenda and vision for where the FASB is going to go in the next several years. One of the topics that they asked for feedback on was related to digital assets. Do you like the accounting model? What are some of the challenges? How material is it, et cetera? And I will say they got a lot of feedback specifically on digital assets, Fong. Maybe I know MicroStrategy submitted a response, and there were several responses I saw that said, we agree with MicroStrategy, and that was their whole letter. But there was a lot of interest, from different stakeholders, companies, investors, auditors, and preparers as well, that, kind of outlined reasons why they thought the FASB should add a project. Now, Fong, I spent a couple of years at the FASB. Standard setting is difficult. There's a lot of things that a lot of people want, and there's not enough people to come up with standards. And if the FASB were to take on every single project that came about, we would never have any standards, any new standards that come about. So they go through their process of due diligence on looking at which of the priorities that the board should focus on, which ones have solutions, which ones are pervasive. If you think about limited resources, you want to get the biggest bang for your buck. So where are we going to provide the most amount of relief to the largest group of stakeholders that are really having an issue? And they're tackling that related to crypto, as well as all the other topics that they asked about. as well as all the topics that people randomly said, I don't like this about GAAP. I don't like that about GAAP. So that process, it takes a long time. I mean, they got over 500 letters. They need to go through each and every one of them and do research. The board did meet in December of last year just to kind of say, here's all the responses that we've gotten. Here's the topics we're looking at. They did add crypto to their research agenda, which basically just means that they're researching it. I wouldn't get your hopes up because we really need something to get onto the technical agenda in order for us to see standard setting. But the time is to be determined. So they haven't announced when they're going to talk about it yet. But the idea would be that they have to talk in a public board meeting about the different feedback that they received and how the board is planning on addressing it. And that'll be the critical board meeting to see whether or not they add a project. Personally, I think there will be some challenges because if you think about, MicroStrategy is really focused on Bitcoin. Some other companies are focused on, cryptocurrency number, 1002, on the list. And then a lot of, cryptocurrencies or, these intangible assets have very similar characteristics to commodities. Do we want to open up the can of worms and reinvent kind of everything related to commodities? So there's a lot of questions about scope, I think, that, the staff basically has to work through as they, present a potential idea to the board to take on a project. So we'll see.
Okay, well, we're making progress. It sounds like we've made progress in the last year.
For sure.
I think having sort of 500 folks chime in really does speak at least a bit to the pervasiveness of the issue, or at least the strength and opinion on the issue. As you work with other corporations and public companies, is this accounting issue, does it stop companies in their tracks? Is it, sort of making it more difficult for them to adopt Bitcoin as part of their corporate strategy?
Fong, I love accounting, and I wish I would say accounting drives businesses and business decisions. I don't think accounting's quite at that level. Now, I will say a lot of companies that I talk with complain about the accounting because it makes other parts of their business hard. So the operational challenges around having to pretty much create two sets of books, one for GAAP accounting and one for management reporting, or to be able to track your cost basis in order to do the right level of impairment when you have a lot of transactions. Like, that's hard, and companies complain about it. Have I heard somebody tell me, Amy, because of those accounting rules, I'm not going to do this? We haven't quite gotten there. Usually there's a business decision why a company will move forward, with their strategy, and operationally, companies just have to comply and do what they need to do in order to meet the accounting rules. Maybe one day we'll get to a point where accounting drives business, but I don't think in this space people are saying, at least I haven't heard of people say, well, because of that accounting, I'm not going to do this.
Okay. Well, thank you. Thanks for that perspective. Let's move to tax for a minute, and maybe, Rob, similar to what Ming and Amy did, and sort of just presenting sort of a quick foundation. Why don't you give us a foundation on sort of some of the key concepts when it comes to corporations, tax, and Bitcoin?
Yeah, absolutely. And I think they span the range is anything from when you're investing in or using it in the business. But some of the key considerations are starting with what's the thing, and how does that come into play? And we may define Bitcoin or other digital assets depending upon the rules that are applicable, be they withholding taxes associated with payroll. They could be, looking at, Amy's accounting rules. Sorry, Amy, but how that plays in from a revenue recognition or a mark-to-market standpoint, how you use it in the business. Do you, some of Amy's rules would say that, you mark it down, but you don't mark it back up. For tax, you may not mark it down. unless you actually have a transaction, you use or dispose. So there's some of the key differences there. But then some individuals, some businesses, if you're using it in a certain way or trading it or dealing in it, then that may allow you to make an election to mark it up or down. So it all depends on what's the thing and how you're using it in the business. We talk a lot about appropriate segregation of assets, in particular different tranches. So, people like yourself who bought in, over time in different tranches at different values, we want to make sure that that basis is respected associated with each tranche. In your example, they differ significantly, as it does with others. There's some crypto OGs out there that have, Bitcoin at very, very low basis. And if they decide to use some in their business, you want to make sure that you're not triggering gain on your Bitcoin that you had at $100 versus that which you bought in at, 40 or 50 or 60. And so there's some hygiene put in place, even going to how you custody it. And if you're self-custodying or if you use a custodian, then weighing out how do you want to appropriately segregate your assets so that you can choose, no, I want to use, we need to, pay a vendor. I want to use the Bitcoin that I, bought at 40 given today's price and just trigger a little bit of loss versus the stuff that I had at $100 and trigger a bunch of gain. So there's some operational hygiene that comes into play. And again, that differs into how you custody it, how you use it in the business. You think about character, if you're holding it for investment purposes, that's probably going to be a capital asset probably, versus if you use it in the business in normal course, maybe that becomes ordinary property. And so we have a lot of discussion around how you characterize it and documenting the intentions behind it so that you make sure that the character you wish to apply is respected. Used in the business, things like, what is the value of the crypto used if you're paying somebody and that needs to go on a form 1099. The thing that came out in the fall, the bipartisan infrastructure bill really put the definition of digital assets in the Internal Revenue Code. It is now defined. That bill did pass. And so that was applicable to people facilitating payments of crypto and really relates to Section 6045, which is, does it go into 1089? There's rumors that it's the 1099 DA for digital asset, which I personally think is pretty cool if we're going to nerd out on that. But there's things like, what value do you put on the form, right? It moves all the time. And so how do you build processes and hygiene to make sure that that gets done correctly? And then the other one that has come up again, the same bill passed it. And that is if you're a US business and you're in receipt of $10,000 or more of crypto starting Jan 1, 23, then you do actually have to report that. Kind of like going back in the day when you'd see people walking into the bank with a suitcase full of cash, the bank had to put it on a form. That rule still exists. People don't do that much anymore. But now you have that with crypto, so you need to put that on. So we don't have a ton of new rules in place, but I'd say the uptake means that people are taking it more serious. There's more options out there for processors and custodians and a lot of considerations to get ahead of.
And Rob, just to chime in quickly, you said, you always joke and say the accounting are my rules.
That's right.
For the record, they are not my rules.
Yep.
But your rules, your tax rules and my accounting rules also sometimes don't jive. So like one of the things that you and I talk about is valuation. Valuation is hard. Sometimes some people view it better to use an average of multiple prices, but GAAP really doesn't allow averages. You need to go for your principal market. And so you may have differences in the accounting rules and the tax rules that you need to also think about, which add, just a little bit more complexity where, working together as a group is oftentimes really helpful.
That's right. Your principal market may not work for my rules that require aggregators. So you're right. And so together, this is what we do all day, every day. Can you tell? We work on how do we make this work for our clients that satisfy everybody's world and try and keep it simple.
Yeah.
Well, I think it'd be really cool if there's a 1099 DA for digital assets.
It's the rumor.
That is really
I cannot credentialize, but that was rumor. I thought it was pretty cool.
So tell me a little bit about, we talked about in some cases companies are accepting payment via crypto or being asked to. In some cases, those are foreign companies or foreign customers who are asking to do that. What are some of the complications associated with owning cryptocurrencies internationally as it relates to tax?
Sure. we have a lot of uncertainty in the rules here, and that equally exists abroad. And so looking at the local rules in terms of revenue recognition and valuation, all the rest, but some of the more common topics are indirect. So VAT and HST and GST and all the rest, and how that differs from normal fiat-based transactions. And it does, by the way, in most countries around the world. There's a few governments that do accept crypto as a form of payment. Most only accept fiat currency today. And so then, you're stuck having to convert, someone's got to convert to fiat and remit that to the governments in the terms of indirect taxes. So the application is interesting and different, requires some study. There's some trends evolving, and I think the most published guidance out there, if you were to pull all the different countries around the world, there's probably more published points of view of different government agencies on tax on the application of VAT than anything else. So that's the good news. But the bad news is we're just not built to enable high volume commercial transactions on something that's not fiat based. So that gets clunky to be compliant, but people do it. The other is, with the U.S. lens, then we have different rates, different tax rates applied depending upon the type of transactions. If you have a non-U.S. subsidiary, how it's engaging in business, and so normal rates 21% right now for corporates, but there's a beneficial rate if it's guilty, and so some transactions may come into play there. So some interesting considerations, but most of it I'd say relates to indirect.
Great. Thanks, Rob. So let me turn to another topic, and Jeremy, maybe you can start the discussion on this Bitcoin exchange and custody. Obviously, that's an area that MicroStrategy has spent a lot of time as we've looked at different exchanges, different custodians, and also have diversified or started the process of diversifying. Tell me a little bit about, again, sort of the baseline, sort of what do companies want to look at when considering exchange and custodian partners?
Yeah, and I think this will evolve with your strategy, the company's strategy, and how that evolves. But certain things remain unchanged, right? For corporations, especially publicly traded companies, you need to make sure you found a safe and secure place to store your assets. You need to do that, obviously, in advance of acquiring Bitcoin. And so, you need to find a custody vendor that has, controls in place to safeguard your assets. You can demonstrate the effectiveness of their controls and their system and the design of the system. That really comes down to having SOC 1 Type 2 certification, that those companies have those controls in place and that those controls are operating effectively. That's what the Type 2 designation gives you. I see Amy smiling because I've learned my accounting, even though I am not the accountant of the group. So look, I think in addition to that, you need to work very closely with your internal audit team, your external auditors, your vendors audit team to vet the controls, because it's not as simple as someone producing that SOC 1 Type 2 certification. There's a lot of detail that you need to get through and make sure that you understand as an organization from a business perspective. And you need help translating sometimes the lingo from the audit world and making sure that you're very comfortable with how that entity, that vendor that you're going to use works. There have been a lot of changes in the landscape over the past year. There's been an influx of qualified vendors, both in the custody and the exchange space. I think on custody, you see a lot more vendors that have that SOC 1 Type 2 certification and that have started to work with companies more and more, and they've evolved. I think you're seeing a lot of competition in the marketplace as a result, and a lot of diversity in the marketplace. And I can talk about that a little bit more when we talk about diversification. I think for the exchange providers, obviously, Ming alluded to the fact that you want to make sure that they are legally able to act as an exchange and trade assets on your behalf and acquire the assets. But you want a reputable company with adequate safeguards and a history of transacting, right, in a safe and secure manner. I think you also want someone who's got access to liquidity. So, are you using an exchange with a deep pool of liquidity? Does the exchange also have an OTC trading service that can execute on your behalf, accessing other pools of liquidity? outside of their own exchange, and can you access block trades? That liquidity is a big piece that you'll want to vet when you're looking at exchange providers and trading. And self-custodying did come up earlier, and I'd say for any corporation, I think that the risk is just too high of trying to self-custody your assets. There might be some situations where that makes sense, but generally speaking, that's not advisable, and you want to use an institutional grade custodian to safeguard your assets and rely on the market leaders, is what I'd say there, and companies that are prepared to do that day in and day out and have the expertise.
It seems like, based on that set of diligence that you would do into selecting exchange provider or custodian, and that level of the set of requirements you sort of laid out, there probably aren't many that we would consider to be institutional grade. Is that right? And have more emerged over the course of the last year?
Yeah, I think that more have emerged. I think, like I said, there are firms that we talk to that maybe don't have that certification, and we've talked to them recently, and they do. And so there's an opportunity to expand our relationships and expand the Bitcoin ecosystem through dialogue and conversations that we probably weren't willing to have previously. So I have seen it directly for us in our conversations. Amy and Rob, I don't know what you guys are seeing, if you guys can corroborate that, but we're definitely seeing an uptick in, let's say, those that get through that first gate. I think there are a number of other considerations that you'll want to take into account from a security perspective. Things like multi-factor authentication for users, multi-level approvals or multi-approval of transactions, as well as separating roles, right? Having this concept of an initiator and approver with multiple approvers, or consensus or majority consensus to approve transactions. Other things are, controls from your provider. For transactions over a certain amount, you may want to require video verification. Does that entity have those controls in place, and will they put those in place and help you execute to further safeguard, your assets? Those are all reasonable questions. But maybe I flip it back to Amy, Rob. What are you guys seeing in the market?
Yeah, I think, definitely a level of maturity, paying attention to people like yourself who want institutional grade solutions, but maybe even a range in the way that people custody. Some are very, tailored and can accommodate, customized requests. Others, just types of custody. Some take a chapter from old school, like HSM type custody solutions, or a hybrid model to accommodate, different types of digital assets. The range of digital assets they accommodate is pretty interesting. Some have a wide range, and they're trying to keep up with everything else that's new. Others just want to focus on what it is. So I think it's just a range of different options out there. Amy?
And Jeremy, as the auditor, what you said is like music to my ears. And so for sure, over the last year, we've definitely seen more companies who are, or providers who have the SOC reports. I think the SOC reports are also getting more fine-tuned and better in terms of the controls that are being covered. So there are more options out there. And I think that's largely driven by the demand. Like several years ago, you didn't have large public institutions who had to worry about, SOCs and controls, who are looking into investing. And now, we're in a different place now. So the market is demanding it, and we are seeing, providers respond. So I definitely think that there's more options out there. And I think that'll continue to happen.
Right. Just have a few minutes left, and I'll cover a couple more topics. One, we've gone through sort of the all the different things that a corporation might do with Bitcoin, including holding it in their treasury, receiving payment, making payment. I guess the last piece, back to the treasury side, is leveraging it, using it as collateral, right? Like either for the purposes of getting a loan, or in some cases to lend it out and get yield off of that. What are you seeing in that space? And where do you see that how much has that evolved in the last year?
Amy, do you want to start and I'll pick it up?
Yeah, we've definitely seen a lot more happen in the lending space. I think just as companies are starting to find other ways to use their crypto, and the rates that some companies are offering are pretty high. On the accounting side, Fang, you didn't like the accounting for the intangible. You're not going to like the accounting for crypto lending. I won't go into it since we don't have that much time, but the AICPA task force has issued some new Q&As that just got issued a couple of weeks ago, and one deals with crypto lending. It's just another phenomenon of having a non-financial asset being used in a financial way and getting stuck in kind of some of the accounting literature. So if you're really excited about accounting, take a look at the practice aid, but we are definitely seeing a lot more activity on the borrowing and the lending, using it as collateral, staking as well.
So, and on tax, one thing, if you're using it as collateral to take out a loan in fiat, you may get to one answer, and putting some care around the contractual terms there to make sure that nothing happens to the crypto, particularly if you've got low basis and high value. If you're actually lending your Bitcoin out, then some care in making sure that you don't inadvertently trigger gain if you have embedded gain in there. Some people like to analogize to the securities lending rules, and they are just that, security lending rules. And so whether or not crypto falls into those rules is a discussion. And so just making sure you have a level of care in how you're analogizing and how the contracts are written. And if you are going to make analogies to SEC lending, making sure that, you do have a right to get it back, back on demand, and you do retain all the benefits and burdens of ownership, sorts of analogies. So it's a big topic, and one that deserves a high level of care, particularly if you have, low basis, high value. But a lot of increased activity there for sure.
All right. Excellent. We are out of time. And so I think we'll stop it here. This was fantastic. Really, thank you, Amy, Rob, Ming, Jeremy, for your contributions and for participating in Bitcoin for Corporations and continuing to openly share things that we've learned.
Thanks.
Thanks for having us.
Hello, and welcome to a panel on Bitcoin products and services. I would like to thank MicroStrategy for hosting this event. We have some excellent participants here today. Just to introduce myself, I'm Aubrey Strobel. I'm the head of communications at Lolly. We also have Alex Edelman, the CEO of Lolly, as well as Tony Gillespie, who is in for Stephen today, a co-founder at BitPay, and Patrick Sells, the Chief Innovation Officer at NYDIG. So I'll let you guys go around and intro yourselves and talk a little bit more about your background, your companies, and your investors. Whoever wants
Great.
to
I'll go ahead and get started. My name is Alex Edelman. I'm the CEO and one of the co-founders of Lolly. What we've done is we've created the leading Bitcoin rewards company. So we partnered with over 1,000 different merchants, and we give merchants the ability to easily give Bitcoin rewards to our 450,000 users. We want to make it both easy for consumers to get into Bitcoin by not having to buy Bitcoin, but to earn it on their everyday purchases. And then we also want to make it easy for merchants to get involved in Bitcoin without not having to do large technical integrations and being able to get set up in less than 24 hours. So yeah, killing two birds with one stone and trying to solve two problems of both merchant adoption and consumer adoption.
I'll go next. Thank you again, MicroStrategy, and everyone for being on. I'm Patrick Sells, the Chief Innovation Officer at NYDIG. We are a Bitcoin as a service or crypto as a service platform, enabling any incumbent or merchant, corporate, bank to be able to offer access to digital assets through their applications or interfaces for their customers. And on top of that technology, we've built really a world-class regulatory and compliance team that helps structure products and create new use cases in the market. NYDIG is everyone from NYDIG is largely from financial service background, and our mission is Bitcoin for all. So very similar to my friend Alex and Lolly, trying to make it accessible to everyone and anyone in a variety of ways.
Great. Hi, Aubrey. And again, thank you to MicroStrategy. I'm Tony Gillespie. I'm one of the co-founders of BitPay. BitPay, I think, is the longest tenured Bitcoin company. We've been around since 2011. We're 1 year older than Coinbase and 1 month older than Bitstamp. But we make it easy for businesses to take advantage of Bitcoin. We provide different tools and services for Bitcoin for businesses to be able to access the Bitcoin ecosystem, primarily on the payment side. We've raised money from investors in a few rounds, and we've got about 80 employees globally.
Amazing. Thank you all for that. As the market's changing, there's different demands sort of for different products and services. I saw the announcement today from NYDIG allowing people to get paid and have savings in Bitcoin. So, and on top of what you're already doing, what are the other sort of services that are in demand right now from people?
Sure. Very exciting today to announce our Bitcoin savings program, which is essentially payroll for companies so that it makes it easy for your employees to allocate a percentage of their pay to Bitcoin. And I think that's a really fun starting point for many corporations as they think about culturally also how they want to teach and educate and bring along their staff into the world of Bitcoin and digital assets, and a lot of demand there. And that's a great example of how we are trying to embed a wallet into different merchants or partners of ours. We do a lot in the bank, credit union, and fintech space so that you can log into a community bank, for example, and buy, sell, hold the way you could at Cash App or PayPal. And so trying to just make it easy for consumers to go to the institutions they already have relationships with. And then I think the other area I would comment on where there's a lot of demand is in the loyalty space. And so thinking about how do you embed a wallet into a corporate loyalty program and use that to attract consumers and new customers and retain them, as well as just drive overall app engagement as their consumers are logging in and seeing the price of Bitcoin or taking advantage of their offerings.
Yeah, I'll go next. So at BitPay, we see Bitcoin as a pretty significant innovation that will start to become popular in global finance and commerce. Much like in the last 25 years, the internet itself has become a popular way to conduct global commerce. We think Bitcoin is just fundamentally a better system, a better financial system. So our mission is to make it easy for any business to accept Bitcoin as a form of payment, but do that in a way that eliminates as much risk as possible for the business.
Yes, so the products that we're seeing have the most adoption is in our Chrome extension, our website, and our mobile app. And all the experiences around Lolly are there to drive consumers into Bitcoin-friendly merchants, sites, stores, wherever they're spending money. So we've since driven over $75 million in GMV for our 1,100 partners, merchant partners. And part of the psychology of it is that users want to see brands that they know and love, and then they can earn from. So, you know, some of our partners being Adidas, Cabela's, Groupon, Booking.com, you know, all of these merchants know we can actually increase their revenue, incremental revenue, by driving our users into these stores, into these sites, knowing that the incentive mechanism is to give users more Bitcoin rewards, and thus be loyal to our merchant partners.
And on that, are we seeing from the customers a demand for Bitcoin specifically? I know some of the products and services on this panel offer other cryptocurrencies, and in addition to Bitcoin. But do we feel that Bitcoin is mostly being asked for, and why do you believe that is?
Yeah, so we've often surveyed our users and the market to really test our assumptions. I mean, we've our team. My co-founder Matt and I have been in the Bitcoin space for a very long time, and the merchant adoption. When we were building a payments company in 2013, the merchants they didn't want to deal with remittances. There weren't services out there necessarily to support that, and there wasn't consumer demand in order to facilitate the increase in GMV, because there just weren't enough people that actually had Bitcoin. And the people that had Bitcoin, because it was volatile and namely went up, they didn't want to necessarily spend their Bitcoin because they were going to be hit with taxes on gains, and they weren't sure if that that famous example of buying pizzas with 10,000 Bitcoin was going to be true. So when our last company was acquired by Rakuten, we biggest cashback company in the U.S. and many parts of the world, we really saw this opportunity of what is the easiest way to distribute Bitcoin to people and get people to be loyal. And we saw Bitcoin as a marketing tool for a lot of these merchants to put their brand and associate it with crypto without actually having to lift a finger. So with Lolly, you can sign up, and within 24 hours, you can typically be live on Lolly's site and be offering Bitcoin rewards with next to no effort on their end. And you get to align yourself with the Bitcoin ecosystem and play a part of it and attract incremental revenue through very little work.
Aubrey, on our side, I think still the vast majority of consumer demand is for Bitcoin. We do support a couple of other assets as well as Bitcoin, but again, where we see the most demand at the consumer level is there. And I think also, especially when we're talking to other corporations about a product offering for their consumers, employees, or even for their own balance sheet, there's a lot more comfort with Bitcoin and the maturity that exists there. I think there's still a growing level of interest, if you will, in other tokens. But really, at the end of the day, especially for real corporations and institutions, the trust and clarity that exists with Bitcoin has kept, and that works well because it's aligned with the vast majority of the consumer demand up to this point.
Yeah, and at BitPay, we support about a dozen tokens right now, but Bitcoin is still the majority of our business, not just a plurality, but a majority. So it is very popular, again, just for the comfort and the maturity. But we look at it a little bit differently. Some of these cryptos have a unique user community that is associated with them. And sometimes there's not much overlap between one particular crypto user community and the Bitcoin user community. So by adding a new crypto to our platform, it's additive, both for our business and for our merchants. They get new customers.
And for your guys' product and services plans for the future, what is your vision from here on out?
I'll go ahead. So we just launched our mobile app, which now has over 200,000 users. The goal of the mobile app is to drive people in store. About 3 years ago when we first started, we were online only. Saw a lot of success there. Brought on over 1,100 merchants. Since 3x our sales, 2x of 2019 and 2020 combined. And so we've seen a lot of success with online, especially through COVID. And now what we're trying to do as we emerge out of a COVID state, drive people back into stores and get rewarded on those everyday purchases at their favorite fast food restaurants, gas stations, even charging stations for EV vehicles. So trying to really capitalize on every single swipe that someone has and make it a rewarding experience around Bitcoin that has historically gone up 10x since we first launched.
I think in terms of where we're going with the product, we've developed over the last year quite a diverse range of use cases. I think 15 or 16 different ones, depending on our partners' needs. And I think that's one of the fun things getting to work with many corporations is understanding their products that exist today and how do you integrate Bitcoin into that. In many cases, it may be something we have off the shelf, but it's also fun, especially as a chief innovation officer, if you will, to get to do that type of work. In terms of where we're going with our product, I think one of the key features we'll be rolling out this year with our embedded wallet is the ability to do deposits and transfers. And so making it more of a fully functioning wallet like you see in other large platforms. And then I think continuing to expand the use case, especially around lending and letting people at point of sale or more easily access dollars against their Bitcoin. We did a partnership with a car dealership where you can now go purchase a car and finance off Bitcoin, and very attractive. And so you don't have to sell your Bitcoin, have the taxable event. And so being able to do that in all kinds of merchants and websites is one of the big areas we're focused on.
Yeah, today our most popular product is our e-commerce checkout, where any business that has an e-commerce website can add BitPay as a payment option, alongside credit cards and PayPal and whatever other payment options they take. And then BitPay will just convert that Bitcoin into dollars and send a direct deposit to their bank account every day so that the business doesn't have to ever handle the Bitcoin or take any risk. But we're seeing a big push for actually the opposite flow, which is more of a payouts product or a mass pay product. And this is for companies who have fleets of freelance workers, marketing affiliates, potentially people that are affiliated in that community globally, and they need to pay out to these people globally. And trying to pay people around the world using the traditional financial rails is very cumbersome. It's expensive and it's slow, both for the business sending it and the person trying to receive the money. So whereas paying with crypto just makes a whole lot of sense. So I think you'll start to see that more and more. It seems like all three of us are kind of getting into that space, just making it easier to get crypto and Bitcoin out there into circulation in people's hands, reducing that friction point and just making it more accessible.
That's amazing for freelancers. I feel like it solves a major problem right there. So what do you think corporations that are, tuning into this panel, what do you think they should consider first when integrating Bitcoin to their products and services?
For one, does it help drive more sales your way? Does it bring a new audience? Does it increase revenue is ultimately what I think every business owner or leader has to be thinking about. And I think the three of our businesses all fit within that. We've been around for a long time. We have proven success, case studies that support that Bitcoin is good for business and that you can attract an incredible customer and have them spend more at your company. And we're all doing it in slightly different ways. But I think we're all in alignment that this Bitcoin future is a very positive future, and it's not just for this self-sovereign individual and store of value that we all know and love. It's also going to drive real revenue for the biggest merchants, biggest companies in the world.
Tony, I saw you were about to jump in there.
Yeah, no, I totally agree with that. I think if a company has made the decision, hey, we want to accept Bitcoin, a couple things you should consider is, do you feel you can handle the risk of handling the Bitcoin yourself? as a company and having your finance team manage that, or would you prefer to outsource that to a trusted provider? That's one thing to consider. Also the ecosystem of Bitcoin is still somewhat fragmented. There's hundreds of different exchanges and wallets out there, and not all of them behave the same way. So if you're going to decide to accept or work with Bitcoin, you want to be compatible with the ecosystem, and be able to support all the wallets and where people are trying to pay and get paid from. You also may want to consider regulations if you're in a regulated industry yourself. Can you work with Bitcoin? Can you work with a trusted provider in the Bitcoin space that is also regulated? But I would echo Alex's comments. We had a research company called Forrester that actually interviewed some of our top e-commerce merchants, and the merchants were very pleased to discover that customers who paid with Bitcoin, 40% of those customers were new to that business that had never shopped there before. So it's a great new way to acquire new customers. And like Alex said, the people who spend Bitcoin typically spend more. The average order value was about double their credit card purchase. So yeah, it can be a meaningful impact for businesses, both for new customer generation or new customer acquisition and revenue generation.
Playing a bit off of what Tony said, I think we fundamentally look at this space as being an equal parts exercise in regulations and technology. And so I think for any corporation thinking about a Bitcoin product or service, it's what are the relevant regulations or laws that I need to be aware of or I need to think about as I put a product together or an offering out there. And so oftentimes encourage them to start there and then go through an exercise of what's the business outcome you're looking to achieve by doing this? For example, if you have a mobile app or an online platform and having daily app engagement is helpful, thinking about a Bitcoin product that helps accomplish that goal. What we see with like our partner Landry's, for example, is by having Bitcoin on their mobile app, increase daily app engagement by almost 2 to 3 times. People are logging in to see the price of Bitcoin there or how their loyalty points have been, affected, positive or negative based on the volatility of Bitcoin. And that just keeps Landry's restaurants top of mind for their customer. And so you can design a use case around solving for that business objective, or to Tony's point, or, a lot of what Alex has spoken about, customer acquisition. There's tremendous consumer demand for Bitcoin. And if you think about, hey, instead of giving you a rebate, I can give you Bitcoin back or Bitcoin rewards as a way of attracting that customer, powerful. And then, or an example like cost savings. And, Tony kind of touched on this in terms of, payments. I think we recently acquired a Lightning payments company called BottlePay. And getting very deep in the world of payments and what can happen, especially now with Taproot in effect. And so a way to think about cost savings. So if you have to move a lot of money around the world or in different currencies. And so what's the legal and regulatory, parameters I need to be aware of? And then what's the business objective, almost unrelated to Bitcoin, that I'm looking to solve for? And then how can I use Bitcoin to help me achieve that outcome?
Yeah, that's a good point on volatility. Just thinking about for users, they are interested in the price, going up. They're also checking if they're going down on mobile apps. But in terms of institutions and their interest on it, what is your answer when you have people very much concerned about the volatility, especially where the market is sort of right now?
Someone else want to go first?
Mm-hmm. Yeah, I can take this one.
Cool.
Yeah, I mean, the volatility kind of generates activity. And, we see some, increases in our payment activity when the volatility of Bitcoin increases, both when the price goes up and when the price goes down. It just kind of leads to a little bit more activity. It's a good thing that we built our service the way we did so that the businesses that are using BitPay to accept Bitcoin don't have to worry about the price. We guarantee the exchange rate. So if they're requesting a payment from us for $200, they're going to get $200 minus our fee, and they don't have to worry about the volatility of Bitcoin. But we do see it does impact, consumer spending behavior, and it's pretty much tied to, the volatility.
Yeah, I think obviously people are aware of it. It's a conversation that comes up, but it hasn't been a real inhibitor or obstacle to moving forward. I think, depending on the use case of it, if you're thinking about, something with your consumers, for example, recognizing that the mass population is well aware of the volatility, and also that can inform a product decision you make. I think as you think about something from like a corporate treasury standpoint, that's where you can also, deploy strategies with like derivatives, for example, to really hedge your downside on it. And so that, conversations around how do I need to think about that risk, and any path you go down, there's usually something that you can do to help manage that. And then I think, really playing off of Tony's point there, the volatility is a feature, not a bug, if you will, from the sense of wanting to drive engagement with whether that's employees or customers, because that will attract them back into your user interfaces to watch that. And so it gives you such a great opportunity to market other products and stay top of mind.
Yes. So in a similar note, we feel it's our job to drive as many sales as possible to our merchant partners. And we found that there's different tactics, to do that. When Bitcoin is up, there's a natural attraction to it because everyone's sort of following this racehorse that, continuing to break all-time highs. And we have no issue with marketing Bitcoin when it's hitting all-time highs. Everybody wants more of it. But the actuality of it is we need to drive sales when Bitcoin is crashing or dipping. That's probably the best way. And so we've actually found that as long as Bitcoin is moving or doing something, there's a lot of way more activity than who we look at as our like competitors being cash back or coupons, where when you're getting $5 in cash back, you get your $5 and you know exactly what your $5 is. When you get Bitcoin $5, it's a moment to remind someone to have more touch points with what that $5 is. And so we make it's sort of a game with all of our consumers and merchants. So if you've earned $5 in Bitcoin from Nike and a week later, that's now $10, we get to remind you. So it's another touch point for Nike. It's another moment for this like positive, experience. And we have historically seen, Bitcoin to go up significantly since we launched. So we use that to remind people, hey, remember that time you shopped at Nike and it's now 10x what it was? They now have a positive, sentiment towards Nike and that they earned, and then they're going to keep going to Bitcoin friendly merchants. When Bitcoin is down, the way that we market it is we say, earn the dip, stack the dip. And people get really excited about that because they feel like they're being a savvy shopper and a savvy investor. And what we know is that most people are not investors. Everybody shops. So if we can turn the entire world to treat them, as we would treat any investor, as teaching them, buy low or earn low and sell high or hold high, then that's a positive for the world, as we want people to be more financially literate through Bitcoin.
Just to play off that a little bit, I kind of got into this whole space about 4 years ago when I joined a bank called Quantic, and it was really to create a Bitcoin rewards debit card. Wanted it just to be easy and quote unquote free. Yeah. And as we brought that product to life, and NYDIG was the partner, what I realized as a card holder myself was that when Bitcoin was down, that's when I tried to go spend all the money I needed to that month. Because I wanted to take advantage of the dip, and kind of seeing that play out both in my own organic behavior, but then also our early customers. And so one of the things I think for corporations is thinking about corporate cards instead of maybe an MX card or a card that's earning points, to use a Bitcoin rewards card as a way of accumulating Bitcoin for your balance sheet. And then again, here you think about the expenses at a corporate level are so much bigger than at a consumer level. And so when there's wild price swings or big price swings, a company can really take advantage of that as another way of accumulating Bitcoin for its balance sheet.
Patrick, you're a case study then. A perfect case study for this. Speaking of case studies or business cases, how do you think, back to advice for these companies, how do you think that a company should go out basically structuring a business case, to their team? They're going back after this call for a Bitcoin product or service.
Yeah, I can jump and start that one off. I think, having a conversation around, going back to what I shared in a prior question around what are some business outcomes agnostic to Bitcoin or cryptocurrency that we're trying to solve for, because you can use that as a means of creating unity and clarity around what to go do. And then from there can, begin to have a series of conversations, right? So if your company is dealing with recruiting, we all know how hard of a recruiting market is. Well, think about something like having a benefit such as Bitcoin payroll and what that could mean for you, or being able to even take that a step farther and say, hey, look, we'll match up to 2% of whatever you put into Bitcoin, and so now you can go offer, a 401k and something like Bitcoin. And so what's the business objective? And then begin to think about crypto or Bitcoin. And I think when it goes that way, because inevitably at the vast majority of companies, there will be someone in the executive team or at the board level who still isn't sure about Bitcoin, or should we be doing this, or what's the reputational risk? And if you can instead come about kind of reverse engineer that conversation from, hey, look, here's a known business problem and a way we think we can solve it. And oh, by the way, that's Bitcoin. That has a far greater effect at being able to get the alignment and the commitment to move forward.
Love that. Anyone want?
Yeah, I agree. Aubrey, I think, a business that's looking to acquire new customers, by accepting Bitcoin, that's probably one of the easiest ways that you can acquire new customers. There's a whole community out there, with lots of market cap that's otherwise illiquid, and now it's spendable. And when you look at the marketing expenses for a lot of companies, they spend a lot of money, a lot of their marketing budget on customer acquisition, and accepting Bitcoin kind of makes that job much easier.
Yeah, I mean, the conversation that we've had, since 2013 with our last company and now this company has just changed dramatically. Of like the ease that anyone in an organization is able to sell Bitcoin into an organization has completely changed. And we've all been in space for a while and have seen that shift from payments and rewards. And so, yeah, it's our job to make it incredibly easy. We've, convinced over 1,000 merchants to join us already. And these are the, household names. We pride ourselves on being the easiest on-ramp for merchants to join us. And part of that is because we have proven case studies. We have over 450,000, loyal, dedicated users that want to earn. And so we start driving revenue your way from day one. And then additionally, there's no reason not to, right? It's pay per performance marketing at the end of the day. It's cash back. It's a program where you're coming in and saying, okay, if we're making, $10 million, from working with Lolly, like we're only spending what part of what we're making. So we try to remove as many reasons to say no as possible. And I think we've done a good job of doing that. So I would say, yeah, we'll shoot me an email, alex@lolly.com, and I'll send you over every reason why you should join us on this Bitcoin future that we're heading down.
Always be pitching. Love that, Alex.
Sounds a dream.
So, how does a company go into, once they're all agreed upon that they're going to offer a Bitcoin product or service? How do they go about leveraging that as a part of their modern P&L strategy?
Yeah, what we do is we help them look at what are they making with existing affiliates or performance programs in the reward space, and across the board we're always able to increase those sales. So a lot of merchants look at us as being like the Amex of rewards. We're not doing extreme discounting with coupons. It's all going into Bitcoin, and our users are extremely motivated by Bitcoin rewards, not the extreme discounting and lack of control that coupons provides. So when we're creating that case, it's like you can go pay Amazon 15% marketplace fee, and you're out 15% to even get in front of somebody in an Amazon marketplace. You can spend 40% margin on ads and marketing to even get in front of the user and hoping that they're going to see it, and end up sending all your money to Facebook and Google. And as we all know, it's getting increasingly more expensive, especially over the last few months. Or you can come in and you can say, hey, like this is a tried and true way to attract a great customer and more revenue to the business, and add positive sentiment and a loyal customer to your business. So those are questions we ask companies to really ask themselves, and ultimately it's going to drive more revenue, and you can set the price of your profit on every transaction. You don't have to have this guessing game of what you're paying Facebook that month or Amazon that month, that you're beholden to those marketplace owners?
You've heard us talk, I think both Alex, Tony, and I all at some level around thinking about Bitcoin from a kind of cost of acquisition or using it to drive higher engagement so that you're really staying kind of eye level with other products and services you have to offer, whether that's a credit union who's trying to, market loans, or a restaurant who wants you to come back to one of their stores. And I think that's, pretty intuitive for how to think about that and a P&L approach to that. There's also, though, thinking about if you're more in the B2B world, instead of, running a competition for your sales reps where they get, X dollars or a trip to something. It's amazing the psychology when you begin to make that a Bitcoin competition in terms of how that can add excitement and ignite the culture. We've seen that play out at a couple of our partners, and it's almost like a 2 times difference in terms of what that resulted in, because there's something very fun about it. And being able to say, for example, like, I own a full Bitcoin, for someone who wasn't in Bitcoin early on, that becomes incredibly attractive. And so you can think about it both for how do I incentivize employees if I'm not B2C or I'm not e-commerce. If I am e-commerce or B2C, how can I use it to drive in-store visits, gamifying existing kind of loyalty programs you have or ways you engage your customer, and then thinking about ways of embedding it into your app. You can begin to back into a very clear P&L approach.
Yeah, I would agree. I mean, the basic nuts and bolts is, you might get incrementally more revenue, and you'll get slightly better cost of processing. But, the real benefit, I think, is engaging with your customers. And some of our merchants that actually are very active on social media, particularly around, Bitcoin and crypto, they get increased loyalty from that. And the marketing value alone of a company doing an announcement saying, hey, we're doing something with Bitcoin. In many cases, that announcement will rank like in the top 5 of the announcements in the entire history of the company. So there's a lot of attention. And we have companies that go live with us and we prepare them. We say, hey, look, if you announce this, be prepared for, lots of interview requests and questions, because this is going to get picked up. And so companies are starting to understand just, hey, they're raising the awareness of their brand, for everything that they're doing, just because they're getting involved with Bitcoin.
Yeah, those announcements on Twitter, I mean, it's crazy to watch them go off, and it's a lot of the community, and the loyalty, and there's obviously people outside of it, but it gets just circulated, I think, in such a faster pace than you see like any sort of other announcement happen with these companies. Speaking of that, there's been a lot of companies that have integrated Bitcoin onto their balance sheet in the past year, MicroStrategy being one, Square and Tesla and some others. And just different trends have picked up in the past year. 2021 was a big year for Bitcoin. But what do you see as some of the major changes in the past year as it relates to Bitcoin for corporations?
I think if I think of this conference last year, very much kind of a focus around corporate treasury as a starting point and kind of getting off of zero, and MicroStrategy and the companies you mentioned did such a great job of kind of giving a use case and a model that you could follow. And I think for many corporations, there's still conversations around how should I do that and what should that look like. I think what you've heard from all 3 of us, though, is a testament to how those conversations have evolved. It's much more than just corporate treasury. It's how can I think about this in terms of both all 3 for myself as a corporation and my balance sheet, for engaging and attracting my customers, and for engaging and attracting my employees. And I think really this notion of Bitcoin for all and it showing up everywhere is what we're really going to see happen in 2022 and 2023. And so the willingness and the creativity of corporations is where I noticed the biggest difference.
Totally. Anyone want to jump in?
Yeah, we hold Bitcoin on our balance sheet, and I feel like everyone should. When you see inflation at 7% and Bitcoin being historically a great hedge on that, being that there's only 21 million Bitcoin, and no one speaks about it better than Michael Saylor. I think he inspired a lot of people with that opener.
He
Yeah.
put more on the balance sheet today. I don't know how much he bought. I forgot what it was, but it was a lot.
Smash that buy button.
Yeah, no, I agree. I mean, if you look year over year at the number of publicly traded companies that have Bitcoin on their balance sheet, I mean, it's big growth, and you'll probably see another growth, between now and this time next year. So there's still some accounting and tax nuances of it, but I think the general premise is that people are willing to figure it out and deal with a little bit of pain and inconvenience because they want that exposure. They have enough dollars on their balance sheet. They want exposure to something else that's uncorrelated. And like Alex said, right? I mean, the inflation is pretty high, and you're not getting anywhere near that interest in treasuries or anything else. So just to stay even, you need to find an asset that's going to outperform.
I think you said something there, Tony, that I just add to. I think very much kind of Bitcoin as an asset, and you think about that from a corporate treasury standpoint. One of the things I've been personally kind of taken aback by in a positive way is how corporations have really started to zero in on Bitcoin, the network, and the payment protocol and what that can mean as they think about paying employees and vendors around the world and FX risk. And so there's this whole other conversation that's starting to happen at real corporations actively working on leveraging the network aspect, even if they're not ready to own Bitcoin on balance sheet. And so that would be the other kind of big change I can sense in the overall environment.
Yeah, and the more global that the workforce becomes with remote work and post-COVID world, Bitcoin is the currency of the internet, digital currency made for the internet. And I've been hiring engineers and people all over the world for the last 16 years, and moving money around the world is extremely costly. And when and using Bitcoin as a way to attract this in a competitive workforce where you're fighting for engineers and you want hire the best people, and it doesn't matter so much anymore where they are. Bitcoin's borderless, and it's actually a huge advantage to be able to offer Bitcoin to attract the best people, the smartest people in the world that don't want 30% remittance fees and transaction costs of moving money across the world. There is now a solution for that, and that solution is Bitcoin.
Yeah, I mean, super advantageous for these companies. It almost feels like because of the remote work and because of COVID, it's almost sped this up in some ways, the way that people are getting paid. And, as Tony was saying earlier, just people are freelancing more, people are doing contract work, there's more creator economy, and, there needs to be a native internet money that can connect everyone all around the world. So, for 2022, the new year, and 2023, what do you think the outlook on institutions integrating Bitcoin or just offering services, or what you could look into the future? What do you think is going to happen in the next few years? Hard to say in this industry, but try your best.
I think we're all going to keep winning. It's more payments, more rewards, more usage. I mean, even 3 years ago, Bitcoin was this foreign concept. And people were getting into it out of curiosity. Now it's just you can't go anywhere and not, hear about it, talk about it. So, unless companies want to get left behind, they have to do something. And in my opinion, the easiest way to get involved in the Bitcoin space is through rewards. And then there's all the, what didn't exist 3 years ago or didn't exist even, 5-10 years ago, is there's now so many ways to easily get set up with treasury, remittances, payments, rewards, that there aren't a lot of excuses not to play a part of this inevitable Bitcoin future. The tools are out there, the companies are out there, and we're all thriving as we have for many years now.
I think, over the next year or two, I spend a lot of my time in the world of regulated banks and credit unions. And so very, very dialed into what's happening there. And I sense that there's both a recognition that there are things happening in the broader crypto ecosystem that probably aren't legal, and those things need to get stopped, but in a way that doesn't cause too much of an adverse effect for consumers and corporations. At the same time, a sense that American companies need really clear guidelines and rules for how to operate in this space so that we can lead innovation here the way that we did with the internet. And so there's both this sense of, how do I need to stop what's happening, but at a certain pace, but I also need to accelerate the clarity. And so I think we've seen that last year. We're going to see that even more so in the next year or two. And that will probably cause some level of disruption in the industry. But ultimately, I think it will mean that more corporations and institutions are comfortable engaging with Bitcoin and digital assets in a variety of ways. And so then I play that out and think about the work that like BitPay is doing and Lolly, ourselves and others, as all of a sudden Americans are living in a world where you can be literally earning free Bitcoin every day in a variety of ways. You can buy Bitcoin through trusted financial relationships like your bank or your credit union. And you think about how much easier access is going to be when, because I think there's a moment when I look back, and while there's been a lot more popularity of Bitcoin and crypto these last couple of years, fundamentally ease of access hasn't gotten much different, right? There's still the primary places you can go to, and that's worked for some, but there's a lot of people who haven't felt comfortable going that way. And so if I can go to buy shrimp at Bubba Gump and I can get some Bitcoin points and begin to learn it, I get comfortable with it. And so what I think we as corporate America can do is radically expand the number of users on the network and making access easy. And as that happens, the price of Bitcoin will go up, and we could usher in another great era of human flourishing and financial security because of the work that corporations are doing to make Bitcoin accessible. So that's kind of the vision I think I see over the next year or two.
Yeah, no, Patrick, I agree. I think, we've got one country now, El Salvador, that has made Bitcoin legal tender. And we'll see how that experiment plays out. But I think you'll probably see more of those. We even have proposed bills, even within the United States. I think Arizona has put forth a bill to make Bitcoin as legal tender within Arizona. Texas is talking about something similar. So I think, we have an election coming up this year. This may become, a topic of political debate. Ask the candidates, hey, what's your stance on Bitcoin? How do you feel that it should be protected, clarified, and promoted? And I think, we could start to see, more companies jump in, once you get greater clarity.
Yeah, Arizona's my home state. So rooting that they pass that bill through. Thanks, guys, so much for all of this. I just want to go around one last time, and if anyone has any closing remarks, as we're kind of nearing the end of the panel at 2:45, so Eastern. If you have any other thoughts, advice to give any corporations or businesses watching this panel.
Sure. Thank you again, Aubrey, for moderating this, and MicroStrategy for having me on, being able to represent NYDIG. I think one of the things that I saw in the banking space was the comfort that came from being able to openly talk to another bank who was also thinking about doing something with Bitcoin, and maybe they were at the same stage in the journey as you were, or maybe they were ahead or behind. But being willing to have those types of conversations goes a long way. And so I think for corporations, not being afraid of reaching out to other corporates that you know of, or any of us three here, I know we could provide many references of companies and how they've thought about it, how they got comfortable. And so rely on each other and kind of the strength in numbers that's ultimately needed. And then really to think about, okay, we can all see what's happened from a popularity of digital assets. Even the fact that this conference exists really speaks to there's a lot of interest in something like Bitcoin. And so I need to recognize that interest is only going to get stronger. And therefore I need to take advantage in some way, or I will lose to my competitor who may have an inferior product or an inferior strategy, but they're harnessing what's happening in the world and this technology. And so being able to figure out what is my starting point, I think is very important, as you think about the next 3 to 5 years and how you position yourself.
Yeah, I'll go next. It's been a great conversation, guys. Always good talking with you. For any business out there that is interested in learning more about how you could accept Bitcoin on your website, feel free to reach out to us. You can email me, Tony@bitpay.com, or just come to our website, bitpay.com, and somebody will follow up. We'd be happy to see what tools we have that might be able to easily plug into your website.
Awesome. And then, closing remarks are, as I said before, Bitcoin is incredibly good for business. The merchants that are adopting it earlier are seeing that, and there's a reason why we have over 1,000 merchant partners of brands that you know and love, and they haven't left us for 3 years. And we started with 500, we now have over 1,100. They keep coming because we are giving them proven results, and more people are becoming interested in getting involved in Bitcoin. So we're here to educate. We're here to talk through what Bitcoin is, why it's important. There aren't dumb questions in this. This is a very new world that we're entering in, but that doesn't necessarily mean it's a scary world. We're all building here because we believe it's a better world. And we're trying to create the easiest way for both consumers to adopt Bitcoin and get involved and educate and become financially literate into this new world, and merchants to become financially literate in this new world. Lolly, BitPay, NYDIG, all solutions that are trying to make it easier for merchants and consumers. And we're here to answer questions, and we're here to help.
Great. Thank you so much, Tony, Patrick, Alex. It's been a pleasure. And thank you again to the team at MicroStrategy for putting on this event, and Michael Saylor. We've appreciated it. So thank you guys.
Thank you.
Welcome back to Bitcoin for Corporations. And I'm here with Lynn Alden, one of the industry analysts I most respect in the space. In fact, Lynn was instrumental in MicroStrategy's decision to put Bitcoin on its balance sheet. And when I was studying Bitcoin and when the corporation was, we were looking for strong, independent voices with macroeconomic backgrounds that understood Bitcoin, that understood the economy. And Lynn is one of the thought leaders that I came across in the space. So I'm really delighted to have her with us today. The subject of this final session is going to be the Bitcoin outlook. And Lynn, welcome.
Thanks for having me. Happy to be here.
Lynn, I've got kind of a four-part objective today. I'd like to look at the Bitcoin outlook, and I'd like to start with the current economic outlook, and then talk about regulation and what's the regulatory outlook for Bitcoin, and then move on to politics and talk about the political outlook and political drivers. And then finally end with views on technology and how technology is driving the Bitcoin outlook. And I can't think of anybody more qualified to join me in this discussion than you. So without further ado, let's start with the first question. What's your current economic outlook for Bitcoin?
Sounds good. Yeah, we'll dive right in because it can be hard enough to get all this into a span of time we have. So, because it's such a broad concept. So if we back up for a second, Bitcoin is still characterized as a risk asset by a lot of pools of capital. And so, that might not be the case for some investors that put 1,000 hours into it to understand at a deep level. But due to its high volatility, it's still very much in the risk on bucket as far as most assets are concerned. And so when we take a step back for a second, we can look at these rate of change of economic growth. And so some of the near-term outlooks for Bitcoin are, somewhat challenging, somewhat uncertain, even as the longer term outlook, still remains very strong. And I think that, basically as we go forward, as more analysts come into the space, there's more and more coverage of Bitcoin and the broader ecosystem. And I think that's only going to strengthen over time. And so, something I've been kind of, warning my clients about recently is that, as the data comes in and shows that in the United States and much of the other, kind of Western countries, we're seeing somewhat of an economic deceleration in 2022 compared to the, kind of the sugar high we had in some ways for 2021. And if you look back historically, Bitcoin's major bull runs are actually during these periods of economic acceleration. And so when we look at this chart here, it's the U.S. Purchasing Managers Index, and we see that back during like the period in 2020, the period in 2017, the period in 2013, these major, kind of upward inflection points in economic growth were also tied into Bitcoin's bull runs, and that could eventually decouple. We could eventually see a changing of that. That kind of correlation that goes on. But historically, that's been the case both for Bitcoin and other risk assets. And so as we look forward, most of the leading indicators continue to suggest that this is softening. And I think that comes down to not necessarily making decision points for Bitcoin related on that, but it's about managing expectations and about kind of understanding the range of outcomes that could happen. When we take a bigger step back and look at the really high level view, though, we can see that even if Bitcoin has a choppy period for a year or more, the kind of the more structural outlook remains very good, and that's largely because one of its biggest competitors, what do you want to hold on your balance sheet, either as an insurance company, as a corporation, as as a hedge fund, as a retail investor, what do you want to have in your balance sheet? Right now, cash is a very expensive form of optionality. It obviously gives us volatility protection. We need it for our working capital. We need it for a variety of different purposes. But it's near the high end of how expensive it is in terms of losing purchasing power over time as you hold it. And so the chart I have here on the left shows federal debt as a percentage of GDP over time. And we see that whenever it gets to very, very high levels, you tend to run in these persistent periods of negative real interest rates for cash equivalents. So that can include cash in the bank, that can include T-bills, basically a variety of these risk-free, low volatility ways of storing value. And that's, if we look at, if we broaden this to other countries, you generally see that's the case. Whenever you have very high debt levels, you start to run into these financial repression scenarios where central banks have a tough time raising interest rates to positive real levels, compared to CPI, let alone compared to the growth of the broad money supply. And so you see many of the high quality assets, going up in value even faster than CPI. And the chart on the right there it shows another way of looking at this. So those green areas are positive real rates, and those red areas are negative real rates. And so the Federal Reserve and other Western central banks kind of find themselves in a tough position right now, because on one hand, they've never been further behind the curve in terms of inflation, at least going back to about 1951. So in modern history, they're about the furthest they've ever been behind. But on the other hand, when you have the prior slide showing economic deceleration, they find themselves historically, they tend to raise rates and tighten policy into stronger periods. And so, for example, the last tightening cycle they did, they tightened through 2017 and into 2018, but they started to run into turbulence towards the end of that when PMIs were rolling over, and they didn't have the inflation levels we have now. And so this, when you're looking at the different options for what kind of assets you can have in your balance sheet, this gives kind of the high level view of why holding cash and cash equivalents is so expensive, at least when you're looking at longer term. And we can look back in history during prior inflationary episodes in the market, and we see that there are very different types of responses depending on how much debt is in the system. And so when we think of high inflation, we often think of the 1970s. And the chart on the right here shows the Fed's, basically I used 3-month Treasury bills as a proxy for short-term rates here because the data set goes back really far. But essentially what you had here was the Federal Reserve was constantly trying to tighten and raise rates to rein in inflation. And they were able to do that in large part because debt as a percentage of GDP, both in the public debt and private debt, including household debt, corporate debt, all these different types of debt outstanding, they were pretty low, and so they were able to raise rates, and it caused economic weakness, but it didn't necessarily cause like a solvency event. Whereas back in the 1940s, which as we go back to here was the last time debt as a percentage of GDP was as high as it is now, you had a pretty big decoupling in terms of inflation and interest rate policy. And so I think a lot of macro indicators show that the 2020s are shaping up to be very similar. We already had this big spike here. We had, the largest ever decoupling in terms of inflation and rates since the 1950s. And I think we're going to get probably more cycles of that going forward. And so that's another good kind of, backdrop for having Bitcoin as a way to protect against that. It doesn't necessarily hedge you the moment you get different CPI prints, but it's basically a structural way of holding something that has intrinsic scarcity compared to something that is intrinsically not scarce, and that for which the yields are no longer keeping up with inflation.
So we could like summarize that as expansive monetary policy and kind of loose fiscal policy that we can expect for the better part of the decade, you think?
I think that's the longer term backdrop. Is basically, I think we're, I've been using the 1940s to characterize this era more so than the 70s, which is kind of the popular conception right now. And there will be counter trends. I mean, even in the 40s and the 70s, you had these disinflationary periods, and you have, as we look at kind of economic cycles, we see these periods of strengthening and softening. And so I think that as long as we manage our time frame expectations, that's what I do see, even though it won't be a straight line. At least I think that's the way the data is looking now.
So in the 70s, like people stampeded into gold, right? What did they stampede into in the 40s? Or what was the response to, inflation in the 40s? Did they have a technique or a primary asset?
They had fewer assets available to them because gold was illegal to own for Americans. Many, foreign pools of capital went into places like gold where they could. Commodities did well, broad commodities, silver, oil. Equities were very volatile in that period because you obviously had a lot of uncertainty, and equities are long duration assets, and so it's hard to price them appropriately when you don't know the economic outlook. And so there really weren't that many places for them to hide and to protect themselves from that. And so there were capital controls. There were a lot of challenges back then. They had a lot more challenges than they had in the 70s. And luckily now, I mean, even though we're in some ways going through a similar macroeconomic cycle as the 40s, investors have more tools available to them, including Bitcoin, to protect their capital against these periods of currency devaluation that you can go through when you have that combination of high debt with some degree of inflation.
Okay.
And I guess so for two more slides just to finish out this section, that's the macro backdrop. So then we can look at some of these cycles we go through in Bitcoin. And what I have here is the the 1+ year HODL wave. We could also call it the Bitcoin distribution cycle. And what we see here, so the blue line is Bitcoin price, and the yellow line, the orange line, is the percent of coins that have not moved on chain in more than a year. And so of course, Bitcoin can be held multiple ways. Some people hold it on chain, some people hold it on exchanges, some people hold securities that are tied to Bitcoin in different ways. And this is looking at the very large snapshot of on chain, which is a very big part of the market still. And what you generally see is that during these major bull runs, all this new capital comes into the space, and some of those longer term holders start to sell into that strength. Basically, they experience 5x, 10x, 20x gains in some cases. They have these, they have these life-changing amounts of capital appreciation. They want to rebalance. They want to consume, and so they distribute into some of that strength, and a lot of that new capital pours in. And then you generally see during these more consolidation type of markets, these bear markets, you generally see the reverse. You have the longer-term, more knowledgeable, higher conviction holders go back to, they become a larger and larger share of the market over time. And so what we see now is that we're back in this distribution cycle where, during the early kind of bullish period of 2021 and, the whole phase there, those longer duration holders are willing to sell into that new strength. But then throughout this consolidation that we've been in for the better part of a year, those longer term hands have not been willing to sell at these prices. And many of them are still accumulating at these prices, dollar cost averaging. Coins are continuing to go from kind of those faster money hands or those weaker hands into those longer duration, stronger, less liquid hands. And so that's generally what sets up kind of the next cycle. You have the macro events. You have basically, you can separate it into demand and supply. So on demand, you have what we covered before, things like risk on or risk off periods, how much liquidity is in the macro environment. Those types of factors can determine how much capital comes into the space or leaves the space. Meanwhile, the other side of it is the supply side. How much of the existing coin base is available for liquid purchase versus how much is locked up into very strong or illiquid hands. And what's made this cycle rather unique is that, in these prior periods when you had these peaks in demand, that was the top of the cycle. Whereas actually in this time so far, we hit a slight new high later in 2021. Not because demand was as high as early 2021, but because you had moderate demand and really, really tight supply. And so there's really two sides of the market to keep monitoring. Basically different analysts, I think, focus maybe too much on just the demand side or just the supply side. And we put both together, basically what we're seeing is right now we're in kind of a weak period for Bitcoin demand, as you would expect from economic deceleration, liquidity being pulled from the market. While the supply side is one of the most bullish setups we've seen. And so that kind of can segment our expectations about maybe the longer term outlook versus that intermediate term uncertainty. And for the last slide, this is a chart from Yuri and Timmer of Fidelity. I think he's been doing really great coverage of this space. And so he has a demand curve model. Basically, you can model Bitcoin as though it's a network effect, as though it's similar to internet adoption or mobile phone adoption. And so you have this kind of, the monetization of this asset over time, this asset acquiring a monetary premium. And so you occasionally go, way above the demand curve. You get that, you get momentum traders jumping on board. It's not like this, it's not this very smooth adoption, but you go through these periods of fast or quick adoption. You can kind of model it over time. And of course, we can't predict the future, how fast things could go, what sort of inflection points, what sort of geopolitical events could accelerate or decelerate that. But it shows that, based on that model, we're towards kind of the value side of that. We're not necessarily in capitulation mode. The last time we had a capitulation was March 2020 during the COVID crash. The prior time was that late 2018 period, which was when the Fed was trying to tighten into declining PMIs, declining economic acceleration. And so, we absolutely could have a lower capitulation, but I would say that we're already kind of in what has historically at least been a valuation, kind of an accumulation phase, kind of a value opportunity. And you can look at all sorts of indicators like dormancy. It's basically another way of measuring are long-term holders selling their coins or not. And most indicators keep showing the supply side remains very tight. And so I think we're in this, kind of to repeat the point that I think we have to manage our expectations maybe about the next 12 to 18 months. Understand that Bitcoin is treated as a risk-on asset by many pools of capital, but that the long-term story looks very favorable now, and that if people basically are looking to get into the space, the network just went through a 50% plus correction, and that basically I think that the supply side is still kind of long-term bullish.
Yeah, I mean, it feels that way. It feels like we're in a consolidation. Can you? What are your opinions about institutional views of this asset class versus equity, bonds, and property, and has it changed any in the past 12 to 24 months?
I think so. We can kind of segment into different milestones, and so as Bitcoin went through this process of network adoption, this monetization, in the really early stages, it was retail to retail. The friction points for even getting into the space. I actually remember hearing about Bitcoin in like 2010, and I kind of just thought about it, and I could have figured it out, but because there's so many friction points, I just kind of lost interest. That's true for a lot of people. And you kind of then in say the next cycle of demand adoption, you had exchanges come in and make it easier for people to get in. It still was kind of the industry was. That was back in the Silk Road days. Some of these companies had trouble getting banking relationships. It was still very early days. then the whole 2017 period was more the mainstream adoption. That's where you had these more regulated exchanges. They had banking connections. There was more built up infrastructure around that, and you had some of the early institutions really get into the space. But I think they built a lot of their framework throughout this bear cycle we went through in 2018, 2019. That's where I think a lot of the foundations were laid. Some of these big institutional grade custodians really built up their product offerings in that environment. And so when we had this demand increase in 2020, I think basically we described that this was kind of the year of institutional adoption. After we already had the institutional build out, now we have insurance companies coming in. We have a couple early pension funds coming in. Basically, these larger pools of capital have been more interested. And it's kind of important that the custodians built that foundation in the years prior. Do you see anything differently, or how are you looking at in terms of, say, the outlook going forward, economic wise?
Yeah, I think about the key institutional milestones or milestones for Bitcoin, and as you went through your historical review, it jogged my memory, and I thought, Fidelity started offering digital asset services like late 2019, right? And I think that the entry of Fidelity into this space was a big game changer. You just showed a chart by an analyst, Jurian from Timmer from Fidelity. And of course, Fidelity manages $10 trillion or more worth of assets. So I thought that was an important endorsement. I think that when MicroStrategy bought Bitcoin as a public company, and we went from, I think we saw there were only like $2 million worth of Bitcoin in any public treasury anywhere in the world. And so we smashed through a barrier there in August of 2020. I think the Coinbase IPO was another big barrier. I suppose MicroStrategy, then Square's acquisition of Bitcoin, then the Tesla acquisition, and then Coinbase. These were all interesting milestones for Bitcoin adoption as an asset class, I think, because we saw this legitimized. And then, of course, all the macro hedge funds. What's interesting here is looking back, the comments on Bitcoin by Paul Tudor Jones, Stanley Druckenmiller, Bill Miller, those were all, I think, instrumental data points. I think the willingness to discuss Bitcoin on public television by the CEOs of Goldman Sachs, by the CEO of JP Morgan, by the CEO of Morgan Stanley, the fact that Abigail Johnson would talk about this on Bloomberg. I think that those were interesting milestones, all very important to the maturation of the asset class. And so I guess before we end this discussion of economic drivers, what do you think are going to be the key institutional or the key economic milestones looking forward that will drive Bitcoin adoption?
So I think we're seeing early signs of it. Basically, I think that the banking industry is still in the early innings of interfacing with the Bitcoin network. And so we've seen, for example, after the institutional grade custodians came in, you started to see some of the investment banks come in. You started to see custodian banks like Bank of New York Mellon get into the space, and now there's firms like NYDIG that are making it easier for commercial banks to offer Bitcoin related services. Basically, a lot of banks have been seeing that people would pull their capital out and send it over to places like Coinbase or other exchanges, and banks are saying, how can we retain more of that in our ecosystem? And so I think basically now you're seeing more and more integration. And so I think there are milestones to watch about more banks getting involved, maybe more insurance companies getting involved. I think another big thing that's really early is the RIA space. So there's tens of trillions of dollars of capital managed by RIAs. And they have all sorts of reporting requirements, rebalancing, needs. They need certain interfaces and certain things. And there are companies now like Swan Bitcoin and others that are starting to roll out more and more services aimed at them, And I think that that's going to be a pretty big, I think, adoption story over the next 3 to 5 years as well. And that's still, that's behind the curve of some of these other pools of capital. So I think as we go along, there's just more and more kind of tentacles going out through the various types of capital that have their needs met in terms of bringing their capital into the space.
Yeah, I feel like one interesting economic milestone we hit was just a few months ago when every government in the world acknowledged large amounts of consumer inflation, CPI and producer inflation, and it was acknowledged as an issue. I feel like a year ago it wasn't acknowledged, but today it is acknowledged. And probably the big economic driver that will continue will just be inflationary public policy. And if we acknowledge that we've got 5 or 6 or 7% inflation, there's no central bank in Western Europe or the United States that has articulated a plan to raise interest rates to 5 or 6 or 7%. So we're sitting in a zone for the next 3 to 4 years where it looks like we've got negative real yields, we've got continuing inflationary policy, and the discussion has moved into mainstream, the discussion of stagflation. And I think, I guess what we saw, which was interesting in the past month, was we saw a crisis of confidence in the equity market, right? That brought, it used to be Bitcoin was a very volatile asset that may or may not be an inflation hedge. And now equity looks like a very volatile asset that may or may not be an inflation hedge. And so you've got the mainstream apparatus, mainstream media, mainstream investors acknowledging crypto and Bitcoin as an asset class versus property versus bonds versus equity, no safe haven, and a mutually agreed problem. And I guess one last point I make is I hear rumors from all my contacts that there's an avalanche of macro hedge funds coming into the space, setting up accounts, like an increase by almost an order of magnitude. It used to be there was 1 or 2 macro traders. And now I think a lot of hedge funds are setting up accounts, and their view is we have to trade this stuff. Whether or not they'll stand up and say, I want to hold $1 billion or $10 billion of it for a decade, well, we're still waiting for that. But it seems like at the end of the year, at the end of 2021, I heard all sorts of stories that, conventional macro funds yielded 3 or 4% ROI in the year, and crypto hedge funds had 500% returns in the year, and 200% returns, and some had 1,000% returns and 100% returns. So if there's anything that people understand on Wall Street, it's money. And someone made 10 or 100x as much trading that volatility. Whether or not I'm ready to marry this asset, I'm sure that I want to trade and I want to be engaged. I can't afford to ignore this. And that's kind of the message that we're hearing even from the big bulge bracket banks on Wall Street, that, I'll paraphrase them, this is not going away. We need to figure it out.
Yeah, I think one of the another milestones to watch around that topic is the introduction of a Bitcoin spot ETF, because we've seen that in Canada now. So it's not really a new concept anymore, but the United States still is in the earlier phase. We have a futures ETF, we have spot closed-end fund type of assets, but still no spot ETF. And I think that's going to be probably a big part of getting more pools of capital into at least the trading side of it, and possibly, the RIAs and other ways of holding it longer term. And I know that you focus a lot on the regulatory front as a publicly traded company. So I don't know if you see developments there, or if you have thoughts on the shape of that over the next year or two.
Yeah. Regulatory drivers and regulatory outlook. I think if you look at the market versus 2 years ago, there was crypto and the regulators were too busy to deal with it. No one wanted to deal with it. And it was like a fringe thing. And I think that with the new Biden administration and with the new set of financial regulators, we had a lot of very crypto sophisticated regulators come into the administration. And now I think there's a consensus amongst politicians, both in the administration and the Senate and Congress, that the crypto economy is here to stay, that they need to master and figure out what this means to the future of the finance industry, maybe the future of the world. What does this mean to America? What does it mean to Western Europe? What does it mean to any country? I feel like it wasn't on the agenda 18 months ago. Like you could have just dismissed it and said, well, it doesn't matter, right? No public company owns this stuff. It wasn't important. And it was an offshore retail phenomenon. And so I think that the fact is the regulators now have it on their radar. That's the first important point. I think the second point is now, instead of just calling it all crypto or cryptocurrency, which is a misnomer, I think that people are realizing that what we have here is digital property, digital currency, digital exchanges, digital securities, digital art, digital commodities, and digital derivatives. And they're breaking this into a taxonomy. Like an NFT is digital art. Well, you know, a small token issued by a group of people is a digital security. A stable coin is a digital currency. Bitcoin isn't a digital currency. A crypto exchange or a DeFi exchange is an exchange. And so now you've got the question of what's the definition of every single type of digital asset? There's not one, there's many. How are we going to treat them? The answer is differently, right? And it crosses every regulator, the CFTC, Treasury, banking regulators, securities regulators. I don't even know who regulates arts and intellectual property rights, you know, in cyberspace. Probably we'll find everybody will have a part of this. So in terms of things that have happened, right? I think that if we look back, playing our little milestone game again, what were the milestones that took place on a regulatory front? I think the fact that the SEC started to opine at all, that's a milestone. The fact that we seem to have, we've had a series of congressional hearings and senatorial hearings, and the consensus out of the hearings is that Bitcoin is property and not a security. I think that's a milestone. I think the denial of the spot ETFs and the approval of the futures ETFs, both of those are milestones in their own way. The approval of an ETF, and now we've got multiple ETFs that trade futures, was a milestone. I think that caused the CME to embrace trading of Bitcoin and derivatives and the like to a much higher volume than before. I think that's brought a lot more institutional money in the space. So I think that those are interesting milestones. I think that you can look at the Crenshaw memo as a milestone. If you look at the testimony we've seen from various regulators, I think there's a consensus. The consensus that's forming in the past 6 months is the world has a demand for stable coin US dollars or crypto dollars. There's a demand, there's a use for them. I think that that's a consensus. I think that the world needs crypto property. That's a consensus in the form of Bitcoin. I think the benefits of 24/7, 365 high-speed trading is viewed as an innovation. It would be good if we were able to do more of that. I think the need for clarity around crypto securities and crypto exchanges, I think that's a consensus. And the idea that the crypto exchanges will be brought into some kind of national securities exchange program, I think that is forming. It's becoming clearer that that's going to happen at some point. And I think the regulators have made clear that in the spot Bitcoin ETF denial, they made clear that they want crypto exchanges to adopt the principles and the protocols of a national securities exchange. And I think that's on the agenda for the coming year. So I think that all of those are kind of regulatory milestones. One of the impediments to adoption from a regulatory point of view is the current FASB accounting for digital assets, which is indefinite intangible. That's been an impediment. Another impediment is FDIC hasn't given guidance on how a bank might hold Bitcoin without having a 1-to-1 reserve ratio for the asset. So lack of FDIC guidance, lack of a spot ETF, the indefinite intangible, those are all negatives, but they're all on the agenda right now. The FDIC has taken up this as an agenda item. FASB has taken up digital asset accounting as an agenda item. And the spot ETF is obviously something that people feel very passionately about. They all are on the radar of regulators. They also all have reached the level of visibility in Congress and the Senate and the administration. We know that there's an executive order that's being prepared to accelerate crypto regulation and clarity. And so I think we're waiting to see what that says. But I think that regardless of what it says, it's going to be a milestone to accelerate institutional adoption of Bitcoin, because although there's some murkiness about who will be able to issue a digital currency and who will and what constraints exchanges will have and what the path is to issue your own token. I think there's questions about that. There's not really any question about the use case of Bitcoin as digital property if you hold it as a long-term store of value and you disclose when you transfer it and pay a capital gain tax on it. I think that's kind of a regulatory safe harbor, or clear zone of behavior for public institutions and public investors.
Yeah, I think over the next couple of years, the kind of the big things that we'll probably get more clarity on is stable coins, basically what sort of collateral they have to hold, what institutions can introduce them and manage them. Basically, we've seen that kind of go, they're increasingly getting regulated. We've already seen changes around companies, making them entirely based on cash and T-bills rather than having a variety of assets, like some of the other ones did. And I think, more and more we're going to get clarity on that. And then two, basically what sort of tokens exchanges can offer the public. Basically, we already have kind of pretty clear guidance on what is and what is not a security, but there still are some gray zones that they can clarify. And we know, for example, that Bitcoin does not meet the definition of a security as property. Many other ones clearly do meet this definition of security. And I think over the next couple of years, we'll probably have more separation and more clarity around the different assets in the space. And it's also it's the U.S. is the U.S. is a really big piece of that, but there's also that whole international component. We see, for example, countries have to some extent flip-flopped on how they're going to manage the regulation around the space. And it's in large part because governments are not these monoliths. There's different interests in the government. They represent different parts of the economy. There's different levels of education, throughout the government on the space. And so we see, for example, if India, say, propose a ban, but then walk that back, it gets challenged. Another group says, no, we need to regulate it. We need to provide clarity. Essentially, I think they started to see that as the industry got very large, rather than banning digital assets, they're essentially banning themselves from digital assets. They're
same in Russia last week, right?
Yeah, we've seen that. I think that's an interesting
24-hour turnaround.
Exactly. Yeah, I think we're quickening the pace of turnover. For India, it took months, and for Russia, it took days. And you see that there's different groups in that government that are more or less opposed to it. And I think so far, obviously, Western democracies have been more open to it because we have the stronger foundation of property rights to begin with. And I think they're also less threatened by it. Whereas some of the more, countries that have more risks to their currency, countries that have, higher scores on authoritarianism, they generally face bigger challenges in terms of Bitcoin and these digital assets in general. But even they, I think, are we're going through this process of having different countries articulate their, clarify and articulate their policies on digital assets. And it generally, for the most part, I think moving in the right direction. but that there's still a lot of uncertainties. And as those get addressed, it allows larger pools of capital to come in.
So key regulatory milestones looking forward, right? I guess my list would be FASB accounting. If we see digital assets go to fair value accounting, that'll be a catalyst. FDIC guidance to FDIC insured banks for holding Bitcoin as a piece of collateral, that would be a catalyst. Approval of a spot ETF would be a catalyst. Those are my big three. Do you have any particular milestones?
I think those are the big ones. I think I'm watching stablecoin space pretty closely, and then I'm watching the international area. I'm watching what Europe does. I'm watching what India does. Some of these larger markets, and I think so far it's moving in the right direction. I think we also, we also need to see clarification around, say, how regulators view Bitcoin's energy policy. I think, there's still a lot of education happening in that space. So Bitcoin faces less of the risks around, say, being labeled a security, like some of the other tokens face, but it's kind of uniquely singled out for its energy footprint. And I think as we, now we have multiple publicly traded miners. I think also one of the things I would look for is more announcements from utilities about integrating Bitcoin as, say, a load balancer as a way to monetize stranded energy production. Because what we've seen is you have the Bitcoin Mining Council quarterly updates, and there's been a number of them. Number of the CEOs of mining companies talk about that utilities are interested in the space, that they're researching the space, but we have not seen a lot of utilities come out with announcements and things like that. And I think I think we're going to see more and more co-integration, co-location between Bitcoin miners and utilities, energy producers, and I think that's something on kind of it's partially regulatory, but it's also partially technological.
Yeah, so Bitcoin mining gets integrated as part of the sustainable, environmentally friendly, or renewable energy initiatives and policies of regulators. That would be a bullish thing and a big catalyst. We're right on razor's edge there.
Yeah, and I think it's interesting because you see it from multiple angles. On one hand, say stranded natural gas, instead of being flared or vented in the atmosphere, can be used for productive purposes. And then two, we see that in these kind of these intermittent sources of renewable production like wind, solar. Bitcoin is a way to stabilize and monetize their periods where they're maybe producing more energy than is needed compared to having less energy that is needed. And I think that's still being kind of worked through, I think, in terms of the public's cognition of that. But I think as we look out a couple of years, that's another milestone to watch, is how energy regulators, policymakers, and mainly I think the companies involved treat Bitcoin and kind of work with Bitcoin and use it for their purposes.
Good point. And I think it leads us to the next question, which is, what's the current political outlook for Bitcoin? Why don't we start with developed world versus developing world? What do you see as the political drivers in the developing world versus developed with regard to Bitcoin?
Well, in the developing world, it's interesting because if you look, NYDIG and others, they've shown, I think Chainalysis did this. NYDIG had it in one of their reports showing the level of adoption in different countries. And generally, you see that some of the higher inflation developing countries have some of the highest levels of Bitcoin adoption, which shouldn't be that surprising. We were talking about inflation being at 7% while yields are at 0%. And that's one of the better currencies out there, the dollar. So imagine if you're in an environment where you're underbanked or unbanked, and you're dealing with double-digit currency inflation, but you have a mobile phone, as over 4 billion people have now, and so they can hold Bitcoin, for example, and for them, obviously they're still dealing with the volatility of Bitcoin, but they have a stronger incentive to latch on to that type of property, I think, than it's more apparent to them. It's quicker hitting them than it does in some of the developed markets that I think they feel they have. It's less kind of in their face, some of the challenges that people are facing in those countries. The developed world has the advantage of like we said before, the Western democracies have these stronger histories of property rights, these stronger legal foundations, and so we've been pretty quick to adopt those. And different countries are just handling at different speeds, different ways. And we went through this cycle early on. People said governments would ban it. But of course, what we're seeing over time is that, obviously you have some countries ban it, but the majority of them, their main question is how do we regulate it? How do we protect people? How do we incorporate it? How do we make sure that our industries are not left behind and our public's not left behind?
Yeah, my thought on that is that I think a lot of people in the United States, they haven't lived under hyperinflation, and also they erroneously think that their real estate holdings or their equity holdings are not currency derivatives. They think that their exposure to inflation might be holding currency or holding low yielding bonds, but they don't really think about their other assets as having a currency risk. Whereas if you live in Argentina or Venezuela or Zimbabwe or if you live through a currency collapse, you realize that the currency is exposed, the sovereign debt is exposed, right? Those countries default on their sovereign debt all the time. Argentina, in essence, renegotiated $50 billion of sovereign debt a week ago. So they're always defaulting on debt, but it turns out that if you have all your assets in a local business or local stocks, those get crushed too when the currency collapses because their revenues and cash flows are in the local currency. So if you've got a 50% inflation rate, the cost of not embracing Bitcoin is 50% of your assets would be lost to you, or 50% of your currency derivatives in 12 months. So the cost of doing nothing, the hurdle rate or the risk rate is 50, 60, 70, or 100% in those environments. So you're a fast learner. And I think that, and it's pretty obvious, I can't hold the currency and I can't buy a market basket of local stocks. And a lot of the people in those countries can't buy S&P indexes. They can't, because of capital controls, pretty difficult, to get past your capital control to invest large sums of money in another nation. So I think that the political dynamic here is the hyperinflation and the rampant inflation in the non-Western European, US developed world is actually a massive, aggressive catalyst for Bitcoin adoption that it's not going to stop right anytime soon. And this is the first currency crisis where Bitcoin existed. A decade ago, and every other currency collapse, right, in the developing world, they never had a Bitcoin. So we don't really have any experience with what happens, except that we have anecdotal evidence to suggest that in Nigeria and Venezuela and Argentina and Turkey, people are getting sophisticated, crypto sophisticated at a pretty rapid rate. And we know the two things they like. The one thing they want is they want US dollar stablecoin. We went from 30 billion to $150 billion of stablecoin in 12 months. So we know they want that, right? They want to go from weak currency to strong. And the second thing they want is they want to go from weak property to strong property. And the strongest property would be Bitcoin. So I think that that's a driver. Let's talk about, you see any differences in views in the US versus Western Europe or Middle East or in Asia toward Bitcoin?
Well, I think we've seen some divergences. I think one of the biggest things about Bitcoin in 2021 was the migration of mining hash rate going from east to west. And so, for years now, China's been the major hub for Bitcoin mining. And that's, they overbuilt their electricity, right? So basically, you had all these overbuilt hydroelectric dams that were not being utilized. Bitcoin miners could go there and soak up a lot of that excess power. You also obviously have a very big electronics industry. It's very, they're able to manufacture, they're able to maintain their facilities. But with the crackdown that they had on the miners there and closing up some of their capital controls and making it harder for their mainland people to trade or own Bitcoin and other digital assets on exchanges, we've seen a really big migration of all that equipment to North America in particular, also other parts of Asia and parts around the world. And so I think that's a huge thing because for years people considered it kind of a Chinese asset in some ways. and now it's centered around North America, which I think is useful for optics. Basically, as China closes themselves off in the world, the West can then turn that around and say, well, we're gonna be at the center of this. We're gonna open up to the world. We're going to regulate it, but of course allow it as property.
Yeah. So yeah, the major regional dynamic is this migration of digital property from the east to the west, screaming home run for North America, right? Devastating economic loss for China. It kind of speaks to their lack of respect for property rights and the capital controls. But I hear that you can't actually own land in China. You can have a 70-year lease on land, or you're leasing everything at the pleasure of the government, or you have your business, you have your land, you have your property at the pleasure of the government. Now, if the Chinese and that entire regime dismisses digital property, presumably that's going to hold back their economic growth over the next 100 years, but not that they care. I suspect they might do a 180 and turn around at some point, just like certain other regimes have. But I suppose right now the primary dynamic has been just this China exodus and massive dislocation. Let's talk about.
Yeah.
Go ahead.
I think basically, yeah, I think they're maybe sacrificing some long-term, optionality for short and intermediate term management, and that might prove to be very short-sighted in the long run.
They love the idea of a cryptocurrency, or at least a stable CBDC currency in the CNY. Although I don't think that they have credibly put forth one that is being used as a medium of exchange outside of China. And on the other hand, the clear winner of cryptocurrency is the US dollar stablecoin, either in the form of Tether or Circle. And I suspect that if you look at the 8 billion people on the planet, everybody wants dollars, even everybody in China. I bet you that in China, the 2 billion people in that sphere of influence, they would also take stable USD. And the way we know this, actually, the acid test is the fact that the Chinese have capital controls. And if they drop the capital controls, the CNY would go awry and huge amounts of capital would flow out of their country, right? That you wouldn't have to fight to keep people from transferring capital if they didn't want to. So
yeah, I think game theory suggests that basically countries that don't need capital controls or have looser capital controls are in a much stronger position to embrace Bitcoin and basically then say, check to you, China. And so, basically that it's their problem if they're unable to or unwilling to open up certain things to the rest of the world.
Yeah, so the growth of Bitcoin and the growth of a stable coin dollar, both of those are going to create more pressure, more financial pressure on China and isolate them in a way. It's like isolating yourself from the internet, except it's might be worse because the network effect of trillions of dollars of US dollars and trillions of dollars worth of property on the Bitcoin network is going to be a pretty powerful network to fight against. I don't know. I think it's more powerful than simply doing your own Google Maps. I mean, they blocked Twitter and they blocked Google and they blocked Facebook and they created their own stack. But this is something which is potentially 10 to 100 times more valuable. To block it could be 10 to 100 times more painful.
I agree.
We'll see. Let's talk about left or right. What do progressives think about Bitcoin? What do conservatives think about Bitcoin?
Well, I mean, I think the good news is that there's no unanimous view, right? So you have bipartisan support across the board in some cases, even though you have, I think, different percentages. And so there are conservative politicians that embrace Bitcoin. There are progressive politicians that embrace Bitcoin. Early on in its history, libertarians were quick to identify Bitcoin as something useful for their ends. But of course, as it became a larger and more mainstream asset class, it got enough to caught the attention of other types of politicians. In the United States, I think so far we're seeing more interest on the political right, and so countries like Texas or Wyoming have been quicker to embrace Bitcoin. Some of the early proponents in the Senate and Congress were more from the Republican side, but we do see it. When for example, we had the hang up with the infrastructure bill and how they were going to touch on digital assets. You had bipartisan politicians chiming in on that, because it's really more about, I think, education versus that kind of strictly polarized political view. Bitcoin itself is not really Republican or Democrat, and so I think different sides see different things in it. There have been there are humanitarian, for example, the Human Rights Foundation emphasizes Bitcoin a lot, right? And so I think from the left side, I think that over time, I think they'll see more of that probably, and I think that going forward right now, we're in an environment where it's a little bit more right leaning, but I don't think there's necessarily anything intrinsic about that, and that over time it becomes, you have situations where, say, two people running for governor, they both embrace Bitcoin, and they have other differences that they work through. And so I think that the biggest question right now is maybe how the left views Bitcoin's energy usage. I think it's more of a talking point more than maybe substantive, but it's something I'm watching. I think as that gets sorted out, and especially I think as Bitcoin gets recognized for its co-integration with the grid, its ability to soak up excess energy, if that narrative dissipates, then I think that's maybe the last big stumbling block as a political issue, at least in the United States. And then as you look elsewhere, the political axes are all different, and so again, it's interpreted different ways at different sides.
Well, it strikes me as being bipartisan too, and on the other hand, opposing it seems to be political suicide, because there's such a passionate group of believers. You're not going to win any votes by opposing either Bitcoin or generally the crypto economy. And reading the tea leaves, you can see that politicians on the left and the right know this is here to stay, and it's a politically important issue that drives a lot of passion. So I think that we'll continue to see politicians on both sides embracing Bitcoin because it's so popular, and it takes us to generational issues: youth versus seniors, the millennials versus the baby boomers. It seems to me like the millennials, of course, are incredibly passionate about crypto assets in general and Bitcoin in particular. Like oftentimes I'll meet people in their 50s. They'll say, "Oh, my sons told me that I need to talk to you," or I'll meet any business leader or politician, say, "Oh, my kids said I got to go talk to you." So the children of the institutional investors and the politicians and the leaders are totally up on this stuff, and they're dragging their parents along. What do you see in this regard?
So the younger generations had the advantage of growing up in an environment where, digital assets intrinsically make sense to them, right? So you can play a video game, for example, and there's items or currency in that game that are of value to you, even though they have no physical embodiment in the world. And so when you have a digital currency, that I think it's quicker of a gap to jump over and understand how that works and what its use case might be. Basically, the ability to do self-custody, this digital asset is quickly understood, I think, by that generation. But it really, I think, comes down to someone's technological understanding. So people in older generations that are more technically savvy are also, quick to jump on it generally. And so there's no inherent stumbling block for any one generation getting it over another. It's all just about percentage wise and speed. And I think that's another thing that politicians are seeing, is that, you generally don't want to fight the demographics trend as it relates to any sort of political topic. And so if you look at the percentages of what each generation owns, the percentage of say whether or not they own Bitcoin or digital assets, the numbers go up the younger you get as you segment the population. And so politicians, unless they want to shoot themselves in the foot, they wouldn't really fight that trend. And so I think that's an important kind of observation going forward.
I guess it has impact on marketers too. Like everybody wants the up and coming consumer and the up and coming voter. So let's talk about milestones. What do you think of the key milestones looking forward in the political spectrum that are going to drive Bitcoin adoption?
I think a key thing is to see more clarity from different countries about their regulation policies, right? So when you in the span of days or years or months, whatever the case may be, like India versus Russia, in terms of the speed with which they talk about banning it versus regulating it, we're still obviously early innings here. And so as more countries articulate a policy about how they're going to enforce that, how they're going to say protect the consumers from scams, things like that. But on the other hand, how they're going to allow institutions and people to invest in the asset and participate, and for companies in their jurisdictions to build on top of it, to innovate. So I think that's the key thing to watch. I think also, basically stable coins being issued by banks or integrated with banks in some way, Bitcoin being more and more integrated with banks. I think any sort of clarity around that, in the United States, any pro-Bitcoin governor, pro-Bitcoin senator, congressperson, mayor, potentially presidential candidate, as if you were to map out over the past several years, say the percentage of explicitly pro-Bitcoin politicians, it started out at virtually none. You might have, say, some state level, legislatures that are in on it, but we started getting up to the national level. Nationally recognized names start to have a position on Bitcoin that has spread like wildfire, and it's still kind of early to middle innings, I think. And so I think basically everyone you check off the list of, okay, here's another politician. Each one of those represents a milestone, and I think there's hundreds to go.
Yeah, I suppose in the congressional midterms, the upcoming midterms will be the first where Bitcoin was a campaign issue for anybody. I see in gubernatorial campaigns as becoming a campaign issue. Maybe the next election will be the first election of a president of the United States where it was a campaign issue. And certainly nation state adoption is key. Watching the policy of the more progressive nations, Singapore, UAE, they'll be leaders in this. Normally they are leaders in free market, financial, technology innovation. I would expect the UAE, given its track record, they pride themselves on being very forward-thinking, mobile, internet savvy. I think that you might see some kind of clear guidance from them. And of course, the 800-pound gorilla is what happens on Capitol Hill in the United States with regard to this. But I think we can look forward to a lot more political conversations that include discussion of Bitcoin, and by inference and by implication, they're all accelerating the adoption of the asset class. No one's talking about things that are irrelevant to life. So speaking about relevant, let's move to our last subject, technology. What's the technology outlook for Bitcoin? What's top on your radar? What do you think about the influence of the technology players on the space, and what's happened and what's going to happen?
So I would say two things are really appearing to me the most. One is the migration of the hash rate to the United States, and the introduction of publicly traded Bitcoin miners has been really fascinating to watch. Financing, to make, basically allow those companies to access capital has really improved in the past 2-3 years. A number of providers in the industry have tapped into that market. Now they have, in many cases, public capital to work with. And so I think that's a huge thing. We also see some of the mining hardware. That's still, so a lot of that is still made in China, but we're seeing announcements from companies like Blockstream, Block, and Intel about getting into that space more directly, the hardware side of it, from a North American point of view. And so I think that's one of the exciting things to watch. And then two, I think the Lightning Network is really fascinating. I think especially Elizabeth Stark and Lightning Labs has done a lot of tremendous work building out the back end, all the infrastructure that allows all these companies to integrate it, into their offering. And the way I would describe it is that Lightning now looks like Bitcoin looked in 2013, right? So we have this build out of a secondary layer, and it's a rather small team of individuals. Lightning Labs has, say, dozens of employees. You see the people at Blockstream working on it. They're independent developers, but it's tremendous how much they've been able to build, because the technology itself is so enabling, and basically there's so much energy in the space. And so I think basically last year Lightning reached kind of critical mass in terms of liquidity and stability. And getting, now it's getting key integration. So exchanges are integrating with Lightning. Jack talked about Cash App integrating with Lightning, and El Salvador obviously integrated with Lightning. I think that Bitcoin went through this phase of it went through this early period where retailers would say, "Hey, we accept Bitcoin now." That didn't really catch on because base layer Bitcoin transactions are not really meant for buying coffee, and people don't really want to part with such a high power asset. They don't want to do a taxable event every time they do something like that. But I think as Lightning builds out, that enables a lot of technologies and basically sets this foundation. And I talked before about friction points, right? So early on, it was hard to buy Bitcoin. It was hard to interact with Bitcoin. And Lightning's gone through a similar pattern, of course, several years delayed. And so as, for example, Lightning Labs and these other providers roll out better and better tools. It becomes easier for companies to integrate it with it. It becomes easier for consumers to use it. And it can be used not just for transferring Bitcoin, it can also potentially be used for transferring other assets. It can be used for transferring information. And so we see, for example, Impervious is building on it. And so I'm kind of watching all these different milestones in the Lightning Network in particular.
Yeah, I think Lightning's a game changer. I think when Lightning can move other assets, when it can move Bitcoin, but when it can also move a stable coin, a US dollar stable coin, I think that makes it something you would want to plug into billions and billions of devices and spread to 8 billion people in the world. And so that's a big deal. I think the idea of an open, permissionless, non-custodial monetary payment network, which is what Lightning represents, is maybe just as profound as TCP/IP or HTTP or SMTP or something. So it's a big deal, and it will then wake up the big tech companies, the Apples, the Facebooks, the Googles of the world. I don't think you can have a competitive mobile app if you don't build Lightning into it. If you roll the clock forward a few years, it's just a matter of time. The Intel miner is a big deal. Hardware wallets and hardware miners are a big deal. And maybe one of the themes is publicly traded companies in the United States shipping Bitcoin hardware, Bitcoin devices, Bitcoin services, Bitcoin software. That's a big deal. That will accelerate adoption dramatically. And we've seen Block, PayPal, Coinbase, Robinhood, they're catalyst. If we start to see some of these offshore exchanges like Binance and FTX start to do more business in the US, that's a catalyst. I think there's $20 billion of crypto VC or more. That's massive amounts flowing in the space in the past 12 weeks. That's a catalyst. I agree with you on Bitcoin miners. I think I count about 24 publicly traded Bitcoin miners by the end of the quarter. And so, as I've said before, you get that many public companies, they're all holding their Bitcoin. They're not selling it. In fact, they're raising capital so they don't have to sell any. So the stock to flow is leaping. The amount of Bitcoin available for sale is falling. And I think that'll continue until the Bitcoin mining sector flips the stock to flow negative and they start net buying more Bitcoin than is being mined. And that makes this a really scarce asset. And it's something you can do with a scarcity like Bitcoin. It would make no sense with silver or gold or a commodity or oil, because those things are commodities and they're unlimited, but Bitcoin is not. So it makes sense to basically recycle your production into your treasury and hold it. So looking forward, and we'll end on this note, what are the key tech milestones that you would look forward to that you would say, wow, this is a really key seminal event that'll accelerate Bitcoin adoption?
So I think so right now we have the announcements like we talked about for some of these North American hardware producers. I think the launching of some of those hardware would be key milestones. It's harder to launch than it is to talk about launching. And so I think those are milestones to watch. I also think that any sort of new offering that happens on Lightning or things that catch on Lightning are worth watching. And so, for example, right now we think of Bitcoin as one thing, but Elizabeth Stark and others have pointed out for years that you can separate the idea of Bitcoin the asset and Bitcoin the network. And so these different technologies that harness Bitcoin the network, like for example, transferring dollar value, for example, I think that's a use case that's still underserved, and I think it's worth watching. I also think that, basically, like I think you pointed out, basically more and more kind of hardware design. So you made the example of having a phone that has kind of a hardware wallet built into it. Just instead of a mobile wallet, maybe a hardware wallet, things like that. More integrations. I'm interested to see products that Block might do, and these other companies that have talked about catering to that market. And so I think anything that launches and that seems to be successful is a milestone worth watching.
Yeah, million user products coming from well-capitalized companies.
And they've been able to raise capital. So even though right now kind of the Bitcoin price is in this consolidation pattern, a lot of companies have been able to raise capital. And so basically every year, say unlike a commodity, there are countless developers working to make the network better, both in terms of, say, Bitcoin core developers and then Lightning developers and then surrounding ecosystems, so wallets and products. So every year it gets easier to use Bitcoin and more things that Bitcoin can be used for.
So the future looks bright. Lynn, thank you for joining me today for our Bitcoin Outlook conversation. I think we got a ton of interesting milestones to look forward to. I think we've checked off a bunch of milestone checklist items. And do you have any final words for the audience?
I think that covers that. I think basically we're in kind of this accumulation phase, and I think it's important to maybe manage expectations around near term whilst emphasizing the long term, looking out at maybe structural risks, weighing those risks. I think obviously one of the impediments to more larger amounts of capital coming into the space is volatility. And volatility feeds on itself, negative and positive. So as more people hold Bitcoin, the volatility can go down over time. We've already generally seen that cycles get a little bit less explosive to the upside and the downside than they used to be. But then that has a feedback loop where if it gets less volatile, people can, or pools of capital, institutions and people themselves can allocate a larger holding to it, which then kind of starts that virtuous cycle. And so I think as Bitcoin matures and acidifies and basically gets less volatile, it entrenches itself more and more as a percentage of say global assets. When you look at how much dollar values in all global assets, what tiny fractions in Bitcoin, I think it can grow from a negligible fraction to a tiny fraction to a small fraction to a medium fraction as that volatility goes down.
Yeah, I couldn't agree more. Okay, that concludes our day one coverage of Bitcoin for corporations. I want to thank everybody for being with us today. I want to thank Lynn for sharing the stage with me for our Bitcoin Outlook. Tune in tomorrow. We'll have 8 really good sessions by institutional grade Bitcoin vendors to show you how you can do commercial banking. And we've got an investment bank. We've got exchanges. We've got custodian.